This Creditors in Commerce classroom session, hereinafter session, is the private exchange of ideas and concepts between the providers and the recipients. The content is not meant as legal advice. The use or attempted use of any idea or procedure discussed in this session as applied to the recipient's own personal transactions, cases, or controversy, or applied to other cases, may or may not result in a favorable outcome or the same outcome as discussed in this session. Each transition or transaction, case, or controversy may be different as a result of unique actions or unique statements made by the parties therein, and each different act or statement in any transaction affects or may affect whether any procedure or idea discussed in this session is relevant to your transaction or that the outcome thereof will be depicted as in this session. The discussion of ideas or procedures in this session is not exhaustive of the subject being discussed. Many ideas and concepts that can affect the outcome of any legal or commercial procedure are not discussed in this session, and the fact that you may not be aware of these issues may have an adverse effect on the outcome of your procedure. It is the responsibility of each party to understand his own transactions and to apply the appropriate and complete concepts necessary for a procedural and substantive remedy thereto. This session may be redistributed privately by any recipient to another recipient requesting them, conditioned upon the fact that this notice is provided therewith. If you have any questions, you may contact Brandon by email at harmony@creditorsincommerce.com or by telephone at 702-866-9077.
I had a situation where I gave a hard money loan to a real estate investor, and he's been having a lot of troubles with delays in the closing. And I had a clause in the contract. Basically, he told me, okay, here's the drop dead date that you would have to have your money back. This deal would have to have closed. And I said, okay. So I put it in the contract. After January 21, the penalty is $100 a day until the number of days that this is repaid, my loan. Well, it just turns out that he not only wanted that loan, he wanted a couple more. And the same terms applied to the other two loans. So what happens? January 21 comes around. I'm really nervous because I really like the guy. I didn't want to have to do that, but that was in the contract. Okay? $300 a day. This guy's getting dinged on late payment fees from a loan that was already really good. Okay? From my perspective, I was getting a good return. Calls me up. Here it is, like almost 3 weeks after the fact. He's getting dinged $300 a day. And he says, what are the damages? I said, it's $6,600. Just late payment fees. He says, can we work on that? And I was thinking of this class, and I thought, I'm just going to ask him, how much responsibility do you believe you can take for this not closing on the 21st? And I was going to give him a deal where if he thought he could be responsible for the whole thing, I was going to say, okay, I'm going to let you decide what you want to pay me, 0 or whatever. But he was so disheveled, I didn't really want to go that far with him in the conversation, but that was what was in my mind, was if he was willing to even accept 25%, I was thinking in my mind I would give him the latitude to, that could be his responsibility, he would have the power to reduce that to like 0 if he wanted to, if he would take that responsibility. But in his mind, he's like, no, they're doing it to me. All these inspectors, every time they come in, they're just nickel and diming me, and it's like, so he's just like not taking responsibility. Sure, he's being pressed or whatever, but it's like this class is like it's about like taking responsibility. And I thought I would give this guy the opportunity to like totally be in charge of this late payment penalty issue, and he could like, if he was willing to step up to the plate, he could have complete freedom. But he wasn't in a place to do that. I gave him some latitude. He did negotiate for himself, you know what I mean? So I won't tell you how it all came out. But it was like, that's what was happening in me was I'm realizing, if I will take responsibility, people are probably going to give me a lot more control over my life.
Mm-hmm. Thank you very much for that. Anyone else?
This is a little bit different than that. I was helping a friend yesterday, the whole day going through preparing taxes and getting things ready to do the 1099 OIDs. And it was in the evening, and I was on my way home back here to Huntington Beach, and I'm on the phone, and I'm chatting, and I look at the car, the license plate, the holder, and it has something written on it, and I'm looking, and it has on there OID doctor. And I'm looking at it, what? And it says OID. I said, okay, this is a sign. This is what I should do. But it said OID doctor. I don't know if there's a medical doctor that's an OID doctor. I just thought it was very amusing.
It's very interesting. You can pass that back for me. Is it on?
I've been one of the world's greatest debtors, fighting with the IRS for 7 years and taking on Citibank. Great stuff. And since the last really 4 weeks, I've been in this conversation about creditor versus debtor. I really took what you said on one of the previously recorded calls about it's not just about finances; it's about your whole life. It's a spiritual conversation. And there was a friend of mine. I lead courses on. I lead courses on basically uniting the genders between men and women. It's one of the hobbies that I have. And there was a particular course I'm leading later in the month, and I asked one of my friends to do a particular mail blast to her group. And it had been several days. She said she was going to do it. It didn't happen. So I sent her a nice little email, and I was careless about one little thing I shouldn't have said. It was benign, and except in her listening, it was the worst thing I could have said. She sends me back what I consider a rage monster email, just really hurt feelings, really upset. And my initial reaction was, wow, stop, be so, sensitive, right? And I thought, that's something clicked, and it was, that's debtor. What would creditor be? Creditor would be accept that I hurt her feelings, accept the offer, which is, you hurt my feelings, right? And go, oh yeah, I did. I whether I knew it or not, I did that. Okay, I got it. And then what is she actually asking? And I was able to listen through the lines of the email and say she wants to be acknowledged for what she is providing. So I sent her 3 paragraphs of, here's how I'm not acknowledging you for all the things you do for me, all of this and all of that, and you're so great at this. And I didn't hear anything back for 30 minutes. And then 30 minutes later, I get this bulk email to all her people on her list. I didn't even hear from her. It was just, you got to go to this thing that Mark's doing. It's going to be great. That. 6 hours later, she emails me back and says, every man in my community has benefited from that email that you sent because I'm so excited. You made me laugh. I feel so. I'm like, that is what bringing remedy as creditor is about everywhere.
Yeah. That is an awesome example. See how the potential of it just spreads, like from him acting like a creditor with one person, it had a effect of turning it around and having someone else act as a creditor with other people. Anyone else? Oh, here we go.
I wanted to share something about the experience throughout the week where I am constantly asking myself, what would a creditor do? But in particular, I have a personal coach, and this week she asked me what was my intention for my business. And my first response was, okay, I'm going to have 2 new clients this week. And she's like, that's not so convincing. She's like, what would a creditor do? She understands it too. So from the creditor perspective, then I opened up the possibility and I asked the question, because I said the creditor asks the questions. And the question came out as, in what ways may I serve 2 new clients this week? And then I said, in what ways am I somebody's solution? In what ways does the solution look like? Let me be that solution. And as soon as I had said that, it was like, whoa, it was like such a different possibility. So I've been even like asleep and I'm thinking this question up, and it's like I'm getting phone calls. People need something, like the attorneys. It's like actually all of a sudden it's like I'm getting 2 new references a day rather than the week. But it was like, oh, I'm coming from how am I somebody's solution, and that's completely being creditor.
Yeah.
I had another experience too where I had to write a letter. It was, I'm going to put in quotes, a demand letter that a client asked me to do, to the CPA. But she's all, don't make it sound threatening. And I'm like, no, I won't. Don't worry about it. And of course, I wrote it on the creditor perspective. So I made an offer. And I specifically said, I'm offering you this right now so we can settle it. And so he calls me today. He's like, just letting you know, we'll be sending out a check next week. And I was like, wow, that was easy. Nice. You just accepted the offer.
Nice. Anyone else? How about anyone on the phone have something to share about how being a creditor paid off?
This is Kevin. I had an extraordinary experience this week. One of my clients, because what I've been doing for the past few years is sovereignty process with people making, angry declarations and put up your Duke's IRS and all this. So, I've got one particular client who owes, according to the IRS, hadn't filed since the mid-'80s, owes about $1 million in back taxes. And so he flew me down because it was time to go to an audit. We'd actually put this audit off. He got dragged to court now, and it's finally time to do the deed. So we were prepared to go in, once again, put up your Dukes. Oh, yeah, show me your jurisdiction, all that. We had a great talk with Brandon. Brandon, thank you very much. Walked in my creditors and walked in as creditors, sorry. And my client was absolutely grounded in this material. And they pushed an offer over to the table to him saying, we've put together our notice of demand and payment, totaling $994,000. And without batting an eye, my client nodded, said, okay, great, I'll pay you. And they almost completely fell out of their chairs. These guys were blown away. I mean, this guy, Barry, the IRS agent, was already freaking out, nervous, stuttering, hands shaking when we walked in the room because he thought he was going to get blasted or who knows what based on all the previous correspondence. But he was just floored. Him looking at the district attorney, they couldn't believe it. The district attorney had to step outside the room to supposedly go talk to the judge. It was almost like at a used car lot where somebody accepts the initial offer. He says, "Oh, let me go talk to my boss about that." Comes back and sits down and my client's just been completely amiable, straightforward, absolutely. And how we'll be paying for this is through money order. So my client's currently getting his birth certificate all bonded up and ready to go, and we're moving forward. And it was incredible. In fact, at the end of the interaction, we were downstairs. We'd gotten in the car, and it was actually my other friend. He'd driven his Hummer. He'd driven eight hours away just to be at this. And so we're sitting in the Hummer. My client rolls down the window as Barry, the IRS agent's walking by. Says, "Hey, Barry, can I take you to lunch?" Barry looks at me like, what? Yeah, I've given you so much junk so far. Let me take you out to lunch. Least I can do. And the guy, he was just stuttering over and over. I'm floored. That's all he could say. I'm floored. And he just walked away. Like we've just completely blown this guy's mind forever. So, thank you, Brandon, and just awesome, amazing.
That is an awesome story. Thank you for sharing that.
My pleasure.
You have something? Hold on. You need a microphone even though you're on the camera.
The actual classroom was very difficult to hear everyone.
It's on. You're good.
Okay.
Yeah.
Can you hear me?
Yeah.
Okay. I was looking around for something to do concerning this class, and somebody told me about the Jim Carrey film Yes Man.
Yeah.
And it seemed to be right along what we're doing here. The debtor being the no man, the yes man being and the creditor. And when I watched that, I could just nothing but think of this class. And I put myself in his position, and I started saying yes to a lot of things too, which changed the perspective of a lot of activities happening. So if anybody hasn't seen that film yet, it's a perfect film for what we're doing right now in this class.
I agree. I haven't even seen it, but the concept of it alone seems to be right on par with what we're doing. Yes, Man.
Yes, Man.
Jim
It's at
Carrey.
the Warner and Beach Theater for like $3 or something like that. It's well worth the investment.
Another one to go check out is The Skulls. I saw the tail end of it last night and remembered the film, and it's truly skulls.
Anyone else on the phone have anything to share?
You know, I've actually got a part two to that. As I'm flying back today from, this is the second leg of the journey from Atlanta back up to Chicago. And this lady, all of a sudden, she only speaks Spanish. She can barely breathe. You know, she's having all these problems, and they say, "Who here speaks Spanish?" And before I even think about it, my hand's going up, you know, and I'm next to her. I'm working with her. I'm giving her a massage, doing a little Reiki on her, calming her down, asking her all kinds of questions. And it turns out there's two nurses and a paramedic on the flight who didn't even stand up to come over. But I just found myself, like, naturally in action, like working with this lady and getting her all calmed down. And, they cleared the runway to land us and to taxi in as fast as possible to get the paramedics into the plane. And everybody's like, he's such a hero, such an angel. Thank you so much. And for me, I'm thinking, well, that's just what there is to do, you know. And it's like when you're standing and being a creditor, this is all there is to do.
Yeah, that's how much has your life changed in the past 3 weeks?
I don't even remember the other self at this point. It was awesome, and it's almost. I got one more for you while I was over there. This other great thing that my client does is so it's water filter. It's an alkaline water. I don't know if you're familiar with alkaline, but it's along the lines of being a creditor, as opposed to being acidic is like being a debtor.
Right.
And so we're at a health food store doling out free water to whoever wants it, and there are people driving from like 150 miles away to get a hold of this water because it cures this, that, and the other. And we were just having a blast, and people looking at us like, you're crazy. You're passing out the water for free? And it's like, yeah, take it. Take as much as you need. Come back next week. We'll give you more.
Nice.
And it's just, it's the way it works. It's the way it ought to work.
It is. I agree. Anyone else on the phone have something to share? Alrighty, I'm gonna put you guys on silent so we don't get any squeaky feedback, and as soon as we go to questions, I'll bring the volume back up. All right. I actually originally had an idea of what I wanted to do tonight. If you guys noticed, there were no documents for tonight, because I'm still not sure what the hell we're doing tonight. Okay? But something has come to me that maybe we need to go back to the money conversation and talk a little bit more about that, because it seems like a lot of what's been going on is people have been getting confusing the forms with what's behind them. You have to understand what it is you're doing with any of these forms before you start filling these forms out. If you understand the process that is underlying the forms, then the forms are just the tool. You understand the process, so you're like, oh, how would I do this? Oh, well, there's this form which does that perfectly. Or how would I do this? Oh, well, this form does that perfectly. So I was going to leave it up to you guys. We can go in a little deeper into money and go into that conversation, or we can go into like the use of language, the proper use of language, and how our use of language could be used as a creditor. But I'll leave it to you. We don't have to have any particular format. But is there any consensus to how many people would like to talk about money? Okay, get a clear concept on that. Okay. Alrighty, so we'll touch on that. If we get some time, we'll go into other subjects. Okay. Having problems with my whiteboard. Okay. Being a creditor. Okay. We've talked about the standpoint of what happens when you write a check on the ledger of the bank, on the ledger of the Federal Reserve, on the ledger of whoever you wrote the check to. Something we didn't really touch on is interest. Okay? Now that word can be confusing because a lot of times you hear the word interest, the first thing you think of, oh, that's the return I get on my savings account. But that's actually a tax on your interest. See, when you deposited funds into an account, oh, this isn't a good pen. When you deposited funds into the account, let's say $1,000, and here's the $1,000 asset on the asset side of the ledger, and here's the $1,000 liability, okay, which is the bank's liability because you can pull these funds out at any time, but these funds right here represent your interest in this asset. Okay, so the $1,000 asset on the asset side of the ledger is represented or by your $1,000 interest in that asset. Okay, you endorsed the instrument and deposited. That gave you this much interest in that instrument. Now, if it's a savings account, you've given the bank the right to use your interest to make money. So, investing, whatever it is the bank's going to do to actually earn a return and pay you on that return. That return is a tax on their use of your interest. Okay? So, if I write a check for $1,000, and this is going to be the escrow account ledger for the bank. Actually, let's leave a little bit of a balance in here. I'm going to write a check for $500. Okay? That is going to reduce my interest in the assets by $500. Now, the asset comes back around over here, right? And it's actually my interest in this new asset is now funneled over here to the escrow account. Okay? So now I've got this $500 of interest I had is being held in an escrow account with this $500 asset that I wrote. Okay? That is my interest in that asset. Okay? Now, if in accounting, or in banking, I should say, if that's my interest and it's being held in escrow, what are the steps to bringing that back to the principal? Okay? First, we must identify the interest. Okay? And the form that we've been discussing in here, which allows me to identify this interest, is what? Anyone got a guess on that? 1099A. Okay? And what we're reporting on that is an abandonment. Okay? We're saying the bank is abandoning our interest in that asset because it's our interest. So that's the first report. Identify the interest, right? Then we want to report the bank's withholding of this interest from us. And what form do we report the bank's withholding of our interest? The OID. Okay? So the 1099A identified the interest. The 1099 OID reports the withholding of this interest. Now, what form would we use to claim a return of this interest to the principal? A 1040. Okay? So, here's the interest over here in the escrow account. The 1099A says the bank is going to abandon this interest in this asset. So we're not necessarily, when you fill out the 1099A, are you going to get the asset back? No. But you're identifying the interest. So you can get a return of the interest if you report the interest as being withheld by the bank and then claim a return of that interest. Okay? So now you see the underlying concept of what's going on with these forms. Okay? You're identifying the interest. You're reporting a withholding of the interest. And then you're claiming a return of the interest back to the principal. Okay? Those concepts are what underline the entire process as we've discussed it up until now with those forms. Now, without getting into specifics about how to fill out the forms individually, is there anything about this that you have a question about? Or should we do, again, what creates this asset, how this asset gets here? Everyone remember how this asset ended up in this escrow account? If I wrote this $500 check to Bill, Bill is then holding the asset. Bill endorses the asset and deposited it into his bank account. Okay? His bank gives him a temporary credit for the endorsed instrument, sends the instrument over to the Federal Reserve. Okay? The Federal Reserve contacts my bank and says, hey, you're going to have to reduce your deposits by this amount. Bank says, okay. They reduce the deposits from my account. Those reduced deposits are the interest in the asset, which has now made its rounds from Bill to Bill's bank to the Federal Reserve back to my bank. So now the asset's being held over here by my bank, and they've taken the interest and put it up here. Now, we know that we create all the money, right? What would happen if we just let all the debtors create as much money as they wanted by whim? Let's just say you could just write a money order for $35 billion, go cash it, and be on your way. What's wrong with that model? Inflation. If everyone had $35 billion, how much would a bag of fries be? A couple billion at least. Okay? So you see why we can't just let debtors make money on their whims. So what's been put in place to keep you from creating such a situation? It's what we call the blocked credit system. Okay? So there are certain entities which have the ability to access your credit. Some of those entities are banks. What the bank does to give you access to your credit is they determine what kind of a future value they can get out of your commitment. Okay? So yeah, you're going to create the funds, but if we just let you create as much, like if the banks didn't have a system in place where you were paying them back and creating that flow of funds, then we would have the same problem where everyone could just go and get a loan for $35 billion, and because the bank got it and deposited it over and you go in and you do an acquisition on the account, we've got the same problem. Okay? So what we're learning here, the best way to apply it, in my opinion, is go ahead and get your loans. okay, and pay them off completely. Not doing acquisitions or collapsing escrow accounts. There's a way you can fractionalize your money. You need to start treating your trust like a bank and start fractionalizing like the bank does. And then the banks, the government, and you and your community will all benefit from you applying yourself as a banker. Okay? Now, let's say, did we do the multi-credit card model thing? How to fractionalize money? Okay. Alrighty. Now, let's say we have our checking account, right? And with this checking account ledger, we deposit $100,000 a year. Okay? We've got $100,000 on the asset side, $100,000 on the liability side. Now, if we just spend that money and claim it back, we're always going to be losing 35% in tax. So it's always going to be reduced, right? So all we're going to get back is what, 60, 65,000? Okay, so if we get back 65,000 and we deposit that, the bank is happy because they didn't have to wait the 3 years to fractionalize that $65,000 deposit. However, if we'd have fractionalized that money and returned $300,000 from this $100,000 to the bank, they'd probably be a lot happier because now they can fractionalize off of $300,000. And how much is your tax going to be? $75,000, something like that? Or am I even close? Something around there. Okay. So we're going to do a simple model of fractionalizing our money. Okay? So we've got our $100,000 in Ledger A for our checking account. And we're going to start simple. And we have 3 credit cards. Okay? All right. Credit card 1, we use to pay all of our bills, or at least all the bills that we can pay with credit card. Okay? Let's say in a perfect world that actually ends up to be the whole $100,000 that we were going to spend that year. Okay, so I made $100,000. I spend $100,000 out of credit card 1. Okay? Then I pay off. Now, we want everyone to benefit, including the credit card companies. Okay? We want to carry a balance in this account for the whole year. So we're not going to always every month pay it completely off. Let's let them earn some interest on it since we're fractionalizing anyways. Okay? So we may pay off half of it every month or whatever, as much as we need to pay off so that we can use it to pay all the bills next month. Okay? Maybe at the end of the year, if you want and you've still got some money sitting over here, then pay the whole thing off. Okay? But what we're going to do is we're going to pay credit card 1 with credit card 2. Okay? Then we're going to pay credit card 2 with credit card 3. Okay? And then we pay off credit card 3 with the checking account. All right? So now, rather than just $100,000 leaving our account, or accounts, we have 1, 2, 3, 400,000 leaving our accounts. Okay? On the 100,000 model, how much did the IRS get? 33,000? Okay. On 400,000, how much is the IRS going to get? Yeah. 140? About $140,000, $150,000. Okay? That's over 4 times the amount of tax they would have gotten. Is that going to benefit the public? It should, you would think, right? Maybe in some way, shape, or form it will. So, And we carried a balance in these 3 credit cards. So all 3 of these credit card companies made money. Not to mention, they're able to fractionalize any deposits you put in there. So each time you make a payment into the credit card, that's a deposit that they're able to fractionalize that as well. So since each credit card had 100,000 go through it, each credit card company had the ability of fractionalizing that $100,000. Okay? Now our return is going to be, what, 260,000, something like that? Okay, so now we get a $260,000 check that we deposit in our checking account. Is that going to help our bank? Immensely. Is it going to be money you can use to help your community? It is. Now, if you really want to get fancy in banking, you can have 10 credit cards and do the same thing. 10 different credit cards doing this same model. Turning your 100,000 into $1 million. Okay? That's fractionalizing, just like the banks do. Okay? Question?
Thank you, Brandon.
Mm-hmm.
I have a question on the credit cards. Where the credit card is not your property, so how can you work with that like it benefits you, like it is your property?
The credit card is not your property.
No, it belongs to the bank.
Right.
So how can you, since it is not your property, how can you use it this way where you can be benefited?
Who's the trustee? Who is one of the trustees on this account? You are. You're a trustee on this account, you're a trustee on this account, you're a trustee on this account, and you're a trustee on this account. None of these accounts are yours. This account belongs to this bank, this account belongs to this bank, this account belongs to that bank, and that account belongs to that bank. So, but you are an authorized representative on each of these accounts. Okay? As an authorized representative, you're a trustee. So if you want, pass the microphone over, please.
Okay. So does it matter? Because I have a credit card with the same bank that I bank with. When those funds go back and forth between my checking account and the credit card,
is it a credit card or is it a debit card?
It's a credit card.
Okay. Well, if it's a credit card, then it's still doing this.
Still doing it.
The reason why we want to use credit cards. See, I didn't use the example of opening up 4 or 5 or 10 checking accounts and moving the funds between those, did I?
Right.
No. Because remember we were talking about the process of getting the funds returned. We have to identify the interest, report a withholding of the interest, and then claim a return of the interest, right? Well, in the sense, I'm always thinking about what's the net gain or loss, okay? If I move funds from this checking account to another checking account, have I lost my interest, so to speak, in that asset? No, because I've just moved my interest. I've moved $100,000 worth of interest from here to here. Now, the thing about a credit card, when I use the credit card, it now alleges that there is an obligation on that account. Okay? A credit card isn't like you charge it up with money and then you can use it. It's you charge it, there's an obligation, you pay the obligation. Okay?
If Bank A has $100,000, Bank B is obligated to pay a debt. If Bank A has $100,000.
Is it on?
If Bank A has $100,000, you move $50,000 into Bank B. Bank B then has an obligation to pay a debt.
Mm-hmm.
A is personal, B is corporate. B pays the debt. can you then OID both?
You can OID what goes out of this account because you're paying an obligation through it. Now, is the check that's going from A to B, because you're saying B is a separate entity?
Correct.
It's a corporation?
It's a corporation.
Is there an obligation there between
Yes.
Bank A and Bank B?
Yes.
And do you not have control of this account, or do you have control of this account?
I'm signer.
You're a signer. So, have you lost your interest?
Partially.
Partially?
To the degree that I own the company.
Right. So you still have control of the interest.
Correct.
So has it been withheld?
Only by virtue of the bank using it from the check that I signed.
That's fine. I'm asking you, what's your net gain or loss? Do you still have that interest?
Yes.
Okay. So if you still have that interest, can you claim a withholding of the interest? Like we can identify the interest, like, yeah, here, the interest was here.
Right.
It's gone now because it's sitting in an asset over here on Bank A.
Correct.
But what's the net gain? The net gain is I've gained an interest down here.
Right.
Okay? Now, I don't want you probably could do this. All I'm saying is if I were the IRS and I'm looking at this and I see that the net change or net gain is zero, that you still have that interest or control of that interest, then I may scrutinize it. I'm not saying that you can't do it. I'm just saying from my thought process of what's going on because there was no net gain or loss and that you still got control of the interest, I don't know so much that I would claim this. Whereas here, if there's an obligation on the credit card, when I pay it, the obligation's gone, but I don't have control or interest anymore. The interest is gone from both. It's gone from over here and it's gone from over here. So there's been two withholdings of the interest.
I guess I didn't see much of a difference between Bank B and the credit card.
When you use the credit card, there's an obligation. There's no obligation here. This is a deposit account. So when you make a deposit here, you've got interest in that deposit.
But the check is still drawn in that account to pay the bill.
I get that. Okay. I'm saying what's the net gain or loss? You got to look at both because you control both accounts.
Right. Okay.
Now, if this corporation, you didn't have control of it, and you had an obligation to this corporation, then when you wrote your check for $50,000 and it ended up at that bank's account, then you could identify that, claim it as withheld, and claim a return for it. Whatever happens to it down here is a completely different story. But if you control both accounts and you're the one filling out the A's and the OIDs and you claim both of these, you might be asking for trouble. And I'm not saying you are, and I'm not saying that that's how it works. All I'm saying is the net gain or loss is you've still got interest in that asset or interest in a asset which you created. Whereas if I wrote the check to Bill and the asset ends up back at my bank, but they take away my interest on that asset because the asset's sitting in an escrow account, then
So if I was to change the corporation to a foundation, that would be a much more structured way of approaching the problem.
Not necessarily, only if you personally have an obligation to the foundation. So the foundation says that you or you make some kind of a pledge to the foundation that this is an amount of money that I am obligated to every month to this foundation. And then whatever the foundation does is separate. Now, if somebody else is running this and it's on their number, then that's completely different and the withholding is happening because you're giving up control of interest. Okay? Behind you.
Brandon, correct me in my thought process here, but I'm thinking back to the original class where we were talking about creating asset securities. So if I write a check for $1,000 in Bank A, rather than them give me that check back, they keep that check as a security, and after 3 years, they sell it on Wall Street, and they don't pay me the profit from that. Therefore, they have an instrument that I created with my check. So I guess what I'm trying to understand is, regardless if I have 5 checking accounts or 10 or 1, every time I write a check, I create a security which can be sold and is sold. So it would seem to me that...
Yeah, but do you have evidence of that security being sold?
I don't. All I have evidence of is creating the instrument with my signature.
Mm-hmm.
That's the only thing I have evidence of.
Right, and then you also have evidence that your interest on that asset was removed from your account, right?
Right.
Because whatever you write the instrument for, an equivalent amount of interest is going to be reduced from the liability side of this account.
Mm-hmm.
So there's evidence right there that your interest is being held over in escrow. Because the asset's being held somewhere. We don't know what happens to the asset. It's somewhere. But the fact that the interest in that asset was removed from your deposit account, or the deposit account for which you have control of, you now have evidence that there has been a withholding of interest. And that's why we follow up the identification of the asset and the interest in the asset with a report on the withholding of the interest on the asset.
So one is based on an assumption that they probably did something. The other one has explicit proof that the liability funds and the interest have been removed.
Yeah, if you're relying on, they're going to sell this and that's what I'm claiming back, well, you don't know that they're going to sell it. You don't know when they're going to sell it. You don't know how much they're going to sell it for. In fact, the reality of it being here that there's an escrow account with the asset and the interest, and we know that a bank, once those funds have been abandoned, can take that interest and put it in deposit so that they can increase their reserves. Okay? So once you've abandoned your interest, then they can do what they want with that interest. The asset is meaningless and worthless without the interest in the asset. See, we've talked about the UCC, and we've talked about how there is no money. What is it we're doing when we exchange services for bills of exchange and other debt instruments? For instance, if I go to the grocery store and I purchase a can of tomatoes, okay? Before I purchase that can of tomatoes, who has an interest in that can of tomatoes? The supermarket does, okay? So they have an interest. When I hand them some registered bills of exchange, aka Federal Reserve notes, I have now given them something with which they are willing to relinquish or abandon their interest in that can of tomatoes. And they give me a little certificate of title to go with it, known as a receipt. Okay? So I've got my certificate of title, I've got my can of tomatoes, and I now have an interest in it. And the proof of my interest is that receipt. Okay? So, and really, when we're talking about interest, that's all that gets exchanged, ever, in public. How many people have ever experienced or known anyone who's gone through a trustee sale with their property? They've had their property foreclosed on, and then there was a trustee sale. Does anyone know what the trustee sold? The bank's interest in the property. Okay? The bank has an interest. What is evidence of that interest? Deed of trust. Deed of trust is their evidence of an interest. It's like a lien. Okay? So they sell their interest, evidenced by the deed of trust, to another bank. So the bank, really, nothing happened. The property wasn't sold. Whatever that Bank A had as an interest was sold to Bank B. That's it, just the interest. And that's all that ever happens. You're never buying anything. You're exchanging interest. Transferring interest. Okay? So you never really buy anything, because we don't exchange legal title in public, do we? No. And we don't. Microphone.
I was just curious on going back to the credit cards. When you're paying credit card 1 off with 2, how do you suggest doing that? I'm used to charging credit cards, but as far as paying, do they take credit card, other credit cards? They'll let you transfer that interest that way. Okay, just clarify.
Some of them do. Mine I can. With online payments, and if you can't, there's a way around it.
When you had the different accounts up there, you had a checking account and 3 credit card accounts. What is the difference between using a checking account and a debit card?
Your checking account is the same as writing check. Using your debit card is the same as writing checks. So that's all over here.
Had a discussion the other night in regards to a car loan that I had, that my car got totaled and the insurance company paid off the loan last year. And I was saying that I can claim that, right? That loan, initial loan that I had on the car.
You mean claim the funds back?
Yeah.
Yeah.
Abandon it. It's just sitting there.
Oh, you're talking about claiming the payment back. Yeah,
the loan.
Yeah, those are two different things, because the loan is a deposit instrument.
It's the application, right?
Yeah, well, there's two different things going on here. When you sign the loan in the application, that's a deposit. Okay,
right.
So let's say it was for a $50,000 car. So you've got a $50,000 asset here. Okay,
right.
That created interest in that asset of $50,000. Now that interest was used to pay the seller of the car.
Right.
The car company or the dealership or whoever sold you the car, they get this interest in the asset.
Right.
But the asset's still there.
Right.
Okay? So you can claim your interest to that asset because you're the one who created the asset. Okay?
Right.
Now, you could also claim all the payments. See, when you make a payment, that's a totally different ledger. Just like when your house, when you purchase a house, the same kind of thing happens, but then they open up a separate account which has another security in it that's worth the amount of the loan plus such and such a percentage plus over 30 years. So we'll say what would have been a $50,000 loan is really, $75K asset over here. And then you start making deposits into an account, which is symbolic of your interest in that asset. Okay?
Mm-hmm.
Now, so all the interest that you deposit for this asset, whether it's $50 payments, $500 payments, whatever, this interest is being withheld from the bank where you're writing the checks from. Okay, so that's why you can claim these funds back. But this asset can be claimed. This asset can be claimed. So they're two totally different things. The payments that you're making on an obligation, that creates a situation with your checking account where the payment, or credit card, depending on how you're making your payments, where interest is being withheld from that account. Okay? And it's being deposited over here. Now, I wouldn't claim this against the people. I wouldn't claim the funds that are being received by the bank anywhere but from the source of where those funds are coming from. So I wouldn't do an A or an OID or anything on this bank over here unless it was strictly for the asset over here. Because any funds that I submitted or transferred, any interest that I transferred to this account is being accounted for in the checking account. Whereas the asset is just sitting there. open, waiting for you to claim it back. Not necessarily. Now, again, if we want everyone to benefit, you don't want to go around collapsing the escrow accounts and grabbing these assets. Okay? But in your case, they got the $75K in liability funds, right?
Yep.
Yeah, so they've got interest. They've got the interest. They've got the liability funds. They've got the money they want. They can't do anything with assets. Public entities, bankrupt entities, can't do anything with these assets.
So you're saying both the 50 original loan and the full, whatever extent, the maturity date of the loan. So there's two different amounts that can be abandoned.
I would only do the amount of the asset, which is the face value of the note.
Right.
Okay. This asset that they're holding, that is something that's traded on the open market because it's got a future value to it. If we go around collapsing those, it's going to collapse the banking system. That's the only way they make money, is by taking your promise to pay something and trading it with people. Okay? If you refuse to pay these, then we're going to have a collapse. But if you learn how to fractionalize your own money, get your loans, pay them off completely, then you're creating a situation where you benefit, the IRS, or creditors of the U.S. benefit, and the banks benefit. Okay? So, again, we've talked about and we've discussed methods that could be used to collapse these accounts, but we really don't want to do that if we're truly going to be approaching this as creditors. Because a creditor is looking to bringing a solution. And a solution that hurts one person isn't really a good solution. As a creditor, you should be looking for a solution that's win-win-win. How can everyone benefit from the solution?
And the 36 months applies to that as well?
Yes.
That brings up a question regarding when you're distinguishing between abandonment or acquisition. An acquisition where you're clearing the ledger account. Then how, if you're just putting an acquisition to clear the balance, which means I can't do an OID because I'm not going to then get my money returned for that, then how does that account get paid off?
Okay, you're asking how, when you do an acquisition of account, what happens to the account? Is that, or how does?
Yeah, how? Because for example, let's say my student loans.
Right.
I passed the 36 months to claim for an OID to do an abandonment, so I'm going to do an acquisition. So then, I guess in my mind, I'm thinking that they're not getting paid. So there's somewhere where I'm not seeing the connection where.
Okay. Let's talk a little bit about acquisition. Okay. Okay. Acquisition. What happens in an acquisition? Okay, we know that when we report an abandonment, we're identifying the interest that's being abandoned by the bank. Okay. When we're doing an acquisition, we're identifying the interest that is to be used in exchange for something. Okay? What is an acquisition? Isn't an acquisition an exchange? I give you something, I get something. Okay? So if there's interest and we do an acquisition, here, let me draw the ledger real quick. Okay. So student loan. And the student loan is closed? Still open? Still open, okay. So there's still an obligation. Okay. So there's, we'll say it's $100,000. You went to a really expensive school. Okay, so there's a $100,000 asset there. She signed a student loan for $100,000. And she has, and therefore she has a $100,000 interest in that asset. Now, if she's only paid $80,000, and there's $20,000 still outstanding as far as interest goes, but she's got a full $100,000 in interest on the asset. So if she does an acquisition with the borrower, is that similar, or could it be the same as saying, I've got $100,000 in interest on this asset. You can go ahead and use that $100,000 of my interest to offset this account. Okay? Just like, remember when the check was being held over here and they reduced my account so that they could bring the interest on that asset up here, right? Well, when I signed the loan, there's $100,000 in interest sitting there. But they don't have the authority to touch it. If I do an acquisition, I'm saying, yeah, go ahead. Use that $100,000 interest against that $100,000 asset. Microphone. Here's another one we can pass around too. Is it? Like they can't hear it? Yeah, I think it's most likely the Skype or whatever. When we listen to them talk, it comes through all crackled and everything. Eventually, we may have some kind of solution worked out to where it doesn't have that static. But everything that's getting recorded in here comes through crystal clear on the audio downloads. So I know it's kind of hard to hang in there on the phone, but we're going to try to do our best. Can you at least get an idea of what's going on?
Yeah, I think so.
Okay.
He called me live and said, hey, it's bad. Just alert you to the situation.
Okay, let me see.
And he's going to be...
Why were we... Are you on your phone right now?
Yeah, I am.
Okay.
So I'm getting a delay, so I'll hear you live and then the echo, so I'll get it twice.
Yeah.
We should probably reinforce the whole thing.
There you are. Okay, but you see the problem with the static. Is it?
Yeah, it's real crunchy.
It's the interest on my audio. Okay. All right. Well, we're gonna do our best.
I had a question.
Okay.
So my question was, in that example, if you've paid $80,000 towards a loan, and you say, well, here's $100,000, use it towards the rest of the 20 that's left over. They don't send you back $80,000. What happens to the rest of that? Is it up to them? What hasn't been like the acquisition for the full amount?
It's a ledgering entry. Okay. They get to keep their $80,000. That's what they get.
Right. Well, right, but they aren't doubling up on it. Like if it was a credit card.
Away. These go away. These cancel each other out.
I see.
Okay. They no longer, because you gave them, you turned over the interest or did an acquisition of the interest for the asset. There's no more asset. If there's no more asset, they can't hold the account open. So they got their $80K. That's as much as they're going to get out of it. Yeah, better than nothing. They should be happy.
So in that case, why wouldn't you abandon it and get your interest back rather than just have them acquire?
If it's beyond 36 months?
No, if it was before, like for example, she's paid $80,000 and it's like, well, why do I want to do this? Why don't I get the money? I can OID it. It'll go back and everybody wins. It seems like with an acquisition, you're the one losing in a certain point of view because you can't use it in your community.
No, you misunderstood me. That's the why. If it's beyond 36 months?
Oh, I missed that part. I'm sorry.
Yeah. If it's beyond 36 months, you do an acquisition and it's going to... I don't recommend doing acquisitions on anything because we don't want to collapse those escrow accounts. We want these debts to stay open and we want them to get paid off. Because if everyone starts paying off all their loans in total, all the bonds that are out there that are based on these securities, they're going to all be great. They're going to be great ratings and they're going to be worth a lot and they're going to be traded, and then all those guys on Wall Street are going to have fun doing what they're doing, and they're all going to make lots of money doing it. and we want to keep them busy. I mean, can you imagine if they all went out of work all of a sudden? What's that? If you create debt in a responsible way, it's a good thing. Because what we're going to be doing is when we start fractionalizing and bringing all these funds back, we can start, that's keeping an even balance. If all these funds that you fractionalize you claim back, you haven't increased the public debt. Now, you didn't reduce the public debt, but here's where being a creditor, here's the next step to being a creditor. You start getting back these $600,000 checks, go buy government securities. Because if you go buy treasury bonds, guess what? You've just removed $600,000 from the public debt. Not only that, the dividends of that bond are all tax-free. You're just going to get windfall funds that you never have to pay taxes on. Okay? Yes. Let's go. Hold on. Let's change the video, and then we'll go on to the next question.
I've got a question.
Okay. Alrighty. Somebody had a question? Okay, go ahead.
So in this example, when you do a 1099A for an acquisition, what else do you have to do other than filing a 1099A? Is there anything else you have to do directly to that organization, that entity, that corporation?
You mean to give them notice?
To actually have it occur where it actually goes off their books?
Yeah, you're going to want to send them their copy of the tax form so that they can ledger it.
And that's it?
Yeah, I mean, you send them a Christmas card, I don't know. Whatever you want to do. In business, all that's required is that you send them the tax form. It would be a 1099A, copy B for the borrower. Any other questions?
On the 1099A, what's the time frame? Is there like 20 days, 30 days that they're supposed to have the account closed or zeroed out?
I don't see anywhere on the 1099A where it would instruct them that, hey, you've only got so much time to ledger it. However, it is a 1099A, and it does require ledgering. So I would give them a time frame. I would say 30, 60 days, especially if it's an account that you're waiting for that statement of account with a zero balance on it. If in 60 days it hasn't been ledgered, then you've got cause for a suspicious activity report. We're getting feedback.
This one's off.
Okay.
Question?
Go ahead.
1099 OID, for our first example, what's the total time frame to accomplish the recovery of the interest?
Time frame for recovering. Well, remember, the recovering of the interest happens on what form? 1040. Right. Okay. You've got, what's the testing period? 36 months. Okay. So in IRS cuts off your year's accounting on what date? April 15th. So in reality, April 15th of 2009 allows you to go back to January 1st of 2005. Okay? So next year, you'll be able to go back to 2006.
No, I think I'm getting at is that once you fill the paperwork out, at what point do you expect to get a return?
Are you doing off a standard 1040 or off a 1040X?
Standard 1040.
Standard 1040, you're looking at like 4 weeks, 3 weeks, depending on if you do it electronic, probably faster. If you do it electronic with deposit straight to your bank account, you'll get it even faster. If you do it by mailing it in and you're waiting for a check, you're going to be looking at a little longer. But I would say anywhere between 3 and 8 weeks at the most.
So from a 1099A until it's that would be 4 weeks.
Okay. Yeah, I thought the question was how long is it going to be before the money comes?
I wasn't specific.
Okay.
It's from a 1099A until a 1040 transaction.
What kind of 1099A? What is this 1099A? We were talking about the first example we talked about at the beginning of the class. Okay. So you're talking about identifying the funds.
Correct.
Okay. So you've identified the funds with the 1099A.
Correct.
Okay. Are you asking when you have to identify it? Is there a deadline for it?
Once the identification takes place.
He's asking from the beginning to the end of the process.
What's the turnaround time?
There's variables. If you file your 1099As and OIDs electronically, 4 days later you can file your 1040.
That was my question.
Okay. If you mail them in, you're probably going to have to wait 3 or 4 weeks before they even get those 1099s recorded in their system before you can claim it back.
That was my question.
Go ahead.
Brandon, real quick, because I don't know if is there anyone here filing electronically doing their OIDs?
Yeah.
Okay. In the description on the 1099 OID form, when you look in the FIRE system, it says you can write a QSIP number, you can write the name if the payer is the issuer is different
than the payer.
And I know in our discussions you write your all capital letters name, but you also showed us how to write the QSIP form of our SSN.
Yeah, but they're asking for the QSIP on
the
security that you're identifying.
That's what I thought. I just wanted to be really clear that those aren't interchangeable.
No.
Yeah.
Yeah, you wouldn't use your QSIP number because your QSIP number isn't necessarily attached to that security. In fact, there most likely isn't a QSIP attached to the individual securities because they all get bundled together, and then that bundle of securities will get a QSIP number.
Thank you.
Okay.
Which would probably be almost impossible to find.
Yeah, short of there's a microphone in the back.
I know that we're talking about student loans. How would you be able to do that with a mortgage?
Okay, here's how I would handle a mortgage. If you can pay your mortgage, okay, you can make payments on your mortgage, you're not in a position where you're just way over your head, pay your mortgage. Pay your monthly payments on your mortgage. At the end of the year, get all that money back because it all came out of your checking account. Then make a really big payment on your mortgage. Then get all that back. Then make a really big payment on your mortgage and pay it off. And now bank is happy. The investors are really happy because that security, which was supposed to take 30 years to mature, has matured in 2 or 3 years. That was well worth their investment.
Except they're not getting the interest.
They aren't getting the interest, you're right. But they are getting the money. and realistically, how many investors are going to hold on to that security for 30 years? They're not. It's going to get traded around because the value is going to keep going down. Because as people default, the value goes down. Okay, it was making $1 million a month last month, but now it's only making $750,000 a month. That security ain't worth as much. So when they go to sell it, it isn't going to sell for as much. Okay, because it's obviously, and maybe even its grade or its rating has gone down. Because if you've got a bundle of securities and half of them have defaulted and no more money's coming in on half of those securities, it's going to have a really low rating and nobody's going to even want to buy it. It's going to be like hot potato, and nobody's going to want to catch it.
Yeah, but once you pay off your mortgage in 2 or 3 years, the investor is going to actually take your money or take the money that you just paid off and fractionalize it as well. So they're going to get their interest that way.
Yeah, exactly. Oh,
yeah, Brandon.
Yeah,
you've mentioned about the 1096 in companion with the 1099A as some kind of report that needs to be filed. So there was a question earlier about what else do I need to do when I file a 1099A? Is there a requirement to do a 1090 or a 1096?
If you are mailing in your 1099As, okay, you are the lender on all the 1099As. you can group those together with a 1096. A 1096 is a summary of whatever's going in with it. It's kind of like the cover page. It's going to say how much all of the 1099s in this mailing add up to, how much all the withholdings on these 1099s add up to, and how many forms they're being reported, who's the filer. That's all information that goes on the 1096. Okay?
That's for mailing hard copies.
Yes, mailing hard
I have
copies.
a question about the cutoff date.
Yeah.
I heard on 2005 there's something going on right now, something early, March 1st. Can you clarify what our time frame for getting 2005 done?
For getting 2005 1040 filed, you have until April 15th. Okay? All 1099s should be in before March 1st. They should be.
If we're filing electronically, so
If you're filing electronically, you should have no problem getting it in by March 1st.
So if I'm filing it on the 23rd, it'll be in on the 23rd, wouldn't it?
No, it's a 72-hour turnaround typically, if you do it right. Huh, Mark? Yeah, because you can mess up your electronic filing too. And the cool thing about the electronic filing, and I really recommend everybody do electronic filing, you know if it got accepted or rejected.
Right
when you
away.
mail it in, it might have got rejected, it might have got accepted, but you don't know. And that's a good way of getting a frivolous filing. Who knows what happened to that report? You might have really freaked them out by the way you filled out the forms, and they just tossed them out. They go, what the hell is this guy doing? And you're never going to hear about it. Because, again, what color are those forms? Red. They're private. Can they respond in public about private forms? No. So you won't hear anything about it. It'll just disappear. And then when you follow up with a 1040 going, yeah, I want a return of my interest. They go, what interest? You ain't got no interest. You don't know what you're talking about. Okay? So electronic filing, I really highly recommend. And the process of getting that, Form 4419 from the IRS. This is for doing, now this type of electronic filing is only for information returns, like 1099s. Okay? You cannot use this system to file your 1040, but you could go to turbotax.com and file your 1040. So, you get the Form 4419. You're going to fill it out, and you're going to fax it into the IRS, and you're going to be getting what's called a TCC number. And I believe that's Transmitter Control Code. Okay? So you're going to be getting a TCC from the IRS. When you receive this TCC, you will then purchase some software from whoever you'd like, whatever software is out there that is going to generate a text file for you to upload at the IRS. So after you've gotten your TCC number, you've gotten your software to generate your files for upload, then you're going to go to fire.irs.gov, and you're going to sign up for an account. And they're going to ask you, well, what's your TCC number? And you go, oh, I got that. It's this. It's these 5 digits. Okay? So you're going to give them the, and then they're going to want you to create a user ID, and they're going to want you to create a PIN, 10-digit PIN, which it's only 9. Your social plus 1. You can use whatever you want for the PIN number, but it's almost comical how many different things you have to type in to get one thing uploaded. You got to have your TCC number. You got to have your PIN number. You got to have your user ID. You got to have your password. Okay, this is all just to get into the FIRE system at IRS. But once you've generated the text file, you've got your FIRE account at IRS, you can now upload these text documents, which are pre-formatted by the software, so that they'll go in. You'll get feedback within a day or two, whether they're good or bad. Yeah, that day they'll be like, you messed up. Yeah. Funny story. You guys know Garrett? There's this guy I know. His name's Garrett. And he was really anxious to get his electronic files filed. And those of you who are familiar with the 1099 FIRE software, it generates its own kind of a database file called a TEN file. And that's just a storage file so that you can like group together whatever you're working on. So like let's say you're preparing stuff and you're going to separate it by lenders and you're going to separate it by years and whatnot. So you could store these different TEN files. So if you need to go back and regenerate it, you can open up this TEN file. It'll bring up all your data, and you can generate a new text file to be uploaded to the IRS. Garrett overlooked that, and he started uploading his TEN files. And we were just sitting there. We were like actually working at my house, right face to face. He's at one side of the table. I'm at the other side of the table. And we're going at it on our computers, and I say something to the effect of, "Oh, did you generate the files for upload or whatever?" He goes, "Well, what do you mean generate?" I go, the text files that you need to upload. He's all, "Well, yeah." There was like a failure in communication there, where he's thinking I'm talking about the TEN files, but I'm talking about a totally separate file. And he goes, "What do you?" And then it kind of dawned on him. What do you mean generate? Like he's starting to realize, oh my God, I was supposed to generate something? The next day, my brother's report comes back from the IRS. 19 different filings, all 19 bad. So then he had to go in and individually correct each one with the proper text file. Okay? So that's just giving you an idea of, but that's a great feedback system, because we also figured out that if you didn't, in the software, when you're using the software, if you're reporting some 2005 OIDs and you don't take the little combo box and go, yes, this is for a past year's filing, even though you put the filing year in it, it ain't going to work. Okay, so there's a lot of little things, but once you get it right, you know it's in there. And did you already tell the class the story about what you heard, what you got back on the OID? You want to tell that? Microphone?
Okay, so I sent in my 1099 OIDs last night. And let's say in box 1 I put $100,000. Well, in box 4 I put $99,000. I just reduced it by $1,000 to see what would happen. Within about 12 hours, I got a response from the IRS, and they said, all of your information returns were rejected because the withholding was excessive. Meaning
excessive withholding.
Excessive withholding.
And then did they have a little link for you to click on? Have you read our fraud alert about 1099 OIDs?
Exactly, saying we suggest you read this link before filing another information return.
Right.
Yeah.
And remember, and those of you who haven't been on the conference calls and stuff, we were actually discussing on this Tuesday's conference call how when you're filling out your OID, box 1 and box 4 should not be the same number. Box 1 is the interest. Box 4 is the interest withheld by the bank. That's what's going to actually get returned to you, is what's in box 4. Okay, you're going to get taxed on what's in box 1. You're going to get returned what's in box 4. You make those two amounts the same, you can do that. There's nothing against the regulations that says you cannot do that. You can claim the complete amount of the funds. However, here's a suggestion, because it won't set off any red flags, and it kind of makes sense. There's two approaches you could take to this. The income part, box 1, could be all of your checks, withdrawals of all kinds, cash withdrawals, everything. If your cash withdrawals are near 10% of your total withdrawals, you could have box 4 be your total withdrawals minus your cash withdrawals. Because when you withdrew the cash, who was holding the interest? You were. You had it in your hands. Here's the interest in the asset I just created. So that would make sense why those two amounts wouldn't be the same. Or you could look at it as whatever I don't get returned is going to be principal that the bank can fractionalize off of. So if I take back 90% and leave them with 10% of the interest, they can fractionalize that to get a 100% of the asset that's been removed.
Just as a quick follow-up, if I'm hearing you correctly, you're saying box 1 is the total amount you're taxed on.
Yeah, that's going to be, box 1 is what gets summed up on a Schedule B and ends up on line 8A of your 1040.
And box 4 is what you're requesting back. That's
Box
the amount.
4 is the amount withheld, and it ends up on line 64 of your 1040. Okay? Since that's the amount withheld, they're going to go, okay, you had $100,000 in income. Right? That was all box 1s added up. You got $100,000 in income. IRS is going to say, well, your tax on that is $33,000. That's not exact. So $100,000, $33,000 income, but then you come back and say, yeah, I realize I owe $33,000 in tax. However, there was withholding on this income, and that withholding was $90,000. So if I had $33,000 in tax and $90,000 in withholding, what am I getting back? 63, 3, 4, 5, 50, 57? Is that right? 57,000 is going to be what your return is. Now you see the value in fractionalizing. Because if you'd have fractionalized that 100,000, even with just one credit card, you would have at least gotten your whole, at least close to your whole 100,000. Let's say I fractionalized it, so this would turn into 200,000. This would turn into 66,000. And my withholding would be 190,000. So what's 190 minus 66? 130? Something like that? 133? You see how that's... See?
10%?
What's that?
You recommend 10%?
Yeah, I would say at least a 10% difference between those two numbers.
So what was he doing?
He did $1,000 on 100,000, which would be 1%.
Okay. I just wanted to see what would happen.
No, he already got his red flag. They sent it right back to him in his face. Boom! You got a red flag. If he does it right, no. The funny thing is, Garrett spent a lot of time with him on the phone the last couple of days trying to figure out exactly what he's doing wrong. And he's actually gotten a lot of good feedback from him. They're just saying, no, you're not in trouble or anything. Just do it right. That's all they're telling him. They're like, yeah, it's okay. People make mistakes. The IRS catches the mistake. So they're not worried about it. They're like, we caught it. You did it wrong. But you've only got so many days to correct that mistake before it drops out of the system or whatever. Or they're going to maybe they'll consider you like, okay, what is this guy up to? He's trying to file all these things. When they're wrong, he doesn't try to correct them. So you should be in there correcting whatever you do get fed back. But like I said, the most valuable thing I've seen so far is using this electronic filing thing because you get feedback. What have I done wrong? Like, I've made mistakes on my 1099s, and the greatest thing about this system is that they catch the mistakes. Like, hey, boom, you got your lenders mixed up here. Or, hey, your transmittal year doesn't match the year on the forms. Okay? So there's a couple of indicators in place that are going to catch your mistakes. Now, they're not going to catch all your mistakes, so still be very careful. I'm not saying, oh, now we can just carefree, just whatever we want, and it's going to be all good. No, still take your time. Make sure you do it correctly. But we've got that safeguard in place, and once your forms have been accepted, you're on notice. Everything has been recorded. Now you know when you file your 1040, there's nothing frivolous about it because everything's been recorded properly. That's one of the biggest problems people are having with this, is they send their 1099s off so weird and out of the ordinary that they don't even get recorded. They get tossed. especially those of you, have any of you in your exploration of commerce heard of the ZYA method? Okay, have you seen that method? Okay, it's a very strange method. It's basically package a whole bunch of things together and send it off to the processing center. Processing center, the scanning center where you usually send your scannable forms, they're only used to getting scannable forms. That's their norm. Scannable form, we feed it into the scanner. Scannable form, we feed it into the scanner. They get this bundle of documents with 5 or 6 1040s in it and 1040Vs and 1099 OIDs. And they're like, what? Instantly, garbage can. Okay? I know from experience those have been garbage canned. Okay? So keep that in mind. You should be looking at what the IRS is expecting. They expect to receive the information in a certain way. If you go outside of the ordinary, I'm not saying you're going to get a frivolous. I'm not saying it's not going to go through, but you are going to send up red flags. And those red flags could delay your process. That's all I'm saying. It's not necessarily that you're not going to get paid. It may just delay your process.
I missed the first 2 classes, so I might not have adequate information to ask the question, but I'm understanding that you're saying that we can... the question is, the money actually comes from the IRS? They're the one that issues the check after you've done this process? Oh, the Treasury Department. Okay. The second question is, say a person hasn't been filing for maybe several years or whatever, and you're plugging in to do this procedure, are you going to run into trouble? No.
I hadn't filed in over 10 years.
Okay.
But that's because I didn't have any tax liability. Like if you haven't filed in 10 years and the IRS has got a list of liabilities that you have, you might want to clean that up. It had been over 10 years since I'd filed, I called the IRS, they were like, oh yeah, you're fine. Nothing on our books.
Right.
Because I had no bank accounts. I wasn't ever employed by anyone. So as far as they're concerned, I didn't incur any liability.
And you weren't ignoring any letters or...
No, they never sent me one letter.
Nothing existed.
10 years of no filing, they never sent me one letter. Because there was no liability on the books.
Quick question. If you do mail your 1099As, can you call the IRS to confirm whether they were accepted?
I believe you could. I'm not sure what kind of a response you would get.
Well,
so yeah, you can call.
I mean, well, the reason I ask is, I mean, if they are somehow communicating on the electronic system,
right,
and they know what you're doing wrong, or you can somehow have a conversation with them of how the process or how you were doing the process, then what would be I'm thinking what would be the difference if you mail in and ask the same questions?
You would think you should be able to contact someone somewhere that would be able to tell you, yeah, those got filed, no problem. And your approach should be as a creditor, okay, if I'm a creditor, I want to know, did I do this right? And did it go through? Because I'm about to send in some other reports based on this, and I feel maybe that I did make a mistake. Like if you're going back through it and you're like, yeah, I'm just not feeling this. I want to make sure everything went through okay. Call them up. The IRS is very easy to work with.
If you have TurboTax or something like that, does that give you a procedure on how to file electronically? Because I don't know how to do that.
Yes, but you can't do your 1099s. This method that we're talking about here, this is for what's called the FIRE system. It's filing information returns electronically. So you could do your TurboTax and everything, but that's a separate process. That's just for filing your 1040,
1040s.
yeah, and stuff like that. So you've got your 1040, you've got the copies, your copy B of your 1099 OIDs that get listed on the Schedule B. If you're actually doing your return in TurboTax, it'll, there's basically a button or something for adding a W-2 or adding a 1099. When you hit Add 1099 and it asks you what type and you click on OID and then you type in the information for it, it's automatically going to generate the Schedule B for you. Okay? So that's a cool thing about TurboTax is as soon as you pick an OID or an INT, it knows that gets listed on a Schedule B. So it automatically will list it out on the Schedule B for you.
Okay, well, I guess I just don't understand the fire.irs.gov.
That's just for information returns, 1099s. Remember, in the 1099s, we're filing the red copies, right? That's the equivalent of using the fire system, the private copies. The public copy, your copy that goes with your 1040, that's copy B. Okay? That you could file on your TurboTax 1040 return. But you have to have already done this or filed the private returns or information returns with the IRS.
Right, yeah, that's step one that needs to be in place before you can even do your 1040.
Right.
Yeah.
Yeah.
Right, but I don't understand how you get it filed electronically. I don't know if somebody else.
You don't understand how the 1099s get filed electronically?
Correct.
Okay, that's this process, getting a Form 4419. That's going to set you up for an account on the fire.irs.gov. Once you've gotten your TCC, which is your transmitter control code, then you can purchase a piece of software that'll generate the upload files for you. So rather than putting together all your copy A's or your red copies with the 1096 and mailing them in, you're going to do them electronically. Okay? So you filled out this form, they send you this number, then you go to fire.irs.gov and you sign up for one of those accounts, and it'll ask you what's your TCC number, what's your PIN number, and you're going to make up all the rest, okay? Then once you've got that account open, you just log in, you generate your file on your software, you log into the IRS website, and you go, I'm going to upload. And then you pick the file to upload, which is a text file that the program generated for you, and you upload it. And it's just like sending in a bundle of 1099, the red copies with the 1096. It's the same thing.
Right. So you scan it on your computer and then upload
No,
it?
you don't have to scan it. You just type it into the program. The program will generate a text file for you.
Oh, I see. Okay.
Yeah. It's not actually sending the form itself. It's all information. It's just a text file.
I see.
That's all parsed like a data file.
Yeah, that's great.
Do you get the 4419? Can you request that over the internet?
Yeah. Well, you go to the irs.gov, go to Forms and Publications, look at their list of forms, find Form 4419. It's a PDF file. Download it, open it, fill it out, print it, take that printed copy, and fax it to the IRS. I send a cover letter that says, when the TCC number has been generated, please call me or email me with the number, and they'll actually call you and give you your number so that you're only waiting like 3 or 4 days rather than a week, 2 weeks to get your number.
I was listening to Jack Smith, and I thought I heard him say there's a way to get 100% of the OID without the IRS taxing it and then dealing with it later.
Yeah, you guys aren't ready for that.
Okay.
It's filing as a creditor, but until you're actually operating as a creditor, we're not going to really touch on that. And it's a totally different approach because you're not necessarily going to fill out the 1099s the same way. You're not going to fill out your 1040 the same way. Everything kind of changes. But really, to be an effective creditor and using that method, because remember, you're always the creditor. In this filing method that we discuss, the straw man is a debtor. Okay, so your corporation, your trust, he's a debtor. You know why? Because he has obligations throughout the year, right? When you get a bill from your gas company or electric company, you're in debt. The minute the bill was generated, you're in debt. Your tax, your property tax, you're already in debt because they're charging you for the tax after you use the benefits of it. If you were prepaying all these things, meaning you've prepaid your property tax for the year, you've prepaid all of your bills for the year, now you've reversed the trust. See, now you're the creditor, or the straw man is the creditor. You've established your trust as a creditor because now the electric company, the gas company, the county for the property tax, everyone is in debt to him. They owe him because the property tax, because you prepaid your property tax, they owe you fire service, police service, parks and sewage, and all that. They owe that to you because you prepaid it. Okay, so then it's a completely different approach. So Keep that in mind. And yeah, there is a way to do it, but we'll get there eventually. We'll all be creditors soon, right? Where's the other microphone? Is it moving around? Okay. Go ahead.
On the form of 4419, when you're faxing the form to the IRS, does it make any difference when you fill it out by hand, or
No, you can fill it out by hand because it's not a scannable form.
Okay.
The only forms you don't, really you want to type in all your forms because it's a lot easier for them to deal with. But that particular form, it's kind of like a SS4, like if you're requesting an EIN number. It's just a form that they're going to look at, plug your information in, and then send you a number. So it's not that big a deal. I like to make it a habit of typing everything in.
Right.
Especially if you're not going to do electronic and you're going to be filing your 1099 OIDs and 1096s, you have to have those typed in. If you write those in, they're definitely getting booted out. Just so you know.
Timing concern. If you're doing 1099As and you do it with the fire system, we actually talked about how banks have 10 days to actually rebut that. But if you're not filing the 1099A B copies until you do your 1040 and TurboTax, that's days and days and days away. So is there a way should you file, we want to put those B copies in the mail as soon as possible from the 1099A.
You could print up your B copies, send them out, and then wait 10 days and do your electronic filing because you know there was no rebuttal. Or if you actually got a rebuttal, which I doubt you'll get, then you would file a corrected.
But if we're doing it electronically using the fire system, the fire software doesn't print B copies, to my knowledge. Oh, really?
Yeah.
Oh. Well,
yeah, my software doesn't send mail for me either. If there's a way if you do know a software that does do that, let me know. Okay, that'd save me a lot of time on commercial processes. Oh yeah, and just mail that out. Comes out the printer, the little envelope machine goes, puts the certified mail strip on there, through the vacuum tube to the USPS. They get it and they send it off. That'd be neat. Actually, you know what? Maybe you're looking for USPS software. Yeah, something you just say, yeah, here's the forms, and then the post office gets your request. They print it out, they put it in an envelope, and they send it off.
Some people call that your assistant.
And some people call it email. It never makes it into the physical world.
Brandon, how much is the software? You said you have to buy a software, or is it
like somewhere between $100 and $200, somewhere in there.
Is there a certain place that you can get it?
1099fire.com. Now, I know there's other software out there, and now that I've used 1099fire, not a big fan. But because so many people are using it, it might be the best one. I really hope not. I know that there's better programmers out there. If I wrote that program, it would be 100% better. Like, it was ridiculous to me. Like, the simple thing of the tab orders, does that not drive you crazy on 1099As? You guys know how when you tab from one field to another and you're entering information? Doesn't that suck? Oh, my God. It goes from city, and the next thing should be state, then zip code, right? It goes from city down to account number, up to amount, down to amount, over to here to EIN, over here to EIN, then down to state, then to zip code. And I'm like, what the? Pain in the butt. I actually have to use my mouse. But the 1099 OIDs on that same program tabs through fine, perfectly. Yeah, every field it goes to. So it's literally a programming error. Yeah, somebody basically took a shortcut. So if anyone from 1099 Fire watches this video or hears this audio, fix your shit. It sucks. I'm considering using someone else. I am taking a position. It sucks. Yeah, actually, I'm offering a solution. Fix it. What would it be like, 1099 Fire, if your software worked?
Pushing the files up.
Oh yeah. Yeah, I don't know if you guys have gotten into that, like when you have a whole bunch of forms and you're trying to like group them or move them around. As soon as you start moving it, the focus moves away from the list. So you got to click on it again, then move it again, then click on it again, then move it again, then click on it again, then move it again. Instead of just going boom, 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 and moving it. Yeah, real fun, that software, let me tell you.
Or how about lining up so it prints actually?
Or how about not having a database with the payer and recipient information? Like, I got to type it in every time?
No, you don't. You can save it.
Yeah, you can save it and you can copy it, but realistically, wouldn't it be ideal to have a database there where I could just select, oh, this is the payer, this is the recipient. Yeah, and it automatically fills out. Wow, what a concept. No, I'm out of software. I don't do software anymore for that very reason.
Are you being a creditor?
I'm not. I'm totally being a debtor right now. Anyone else? Any other? We ready for a break? All right, hold on before you guys get going and crazy. Anyone on the phone have any questions about what we've discussed so far?
Yes, I do. This is Camille.
Hey, Camille.
You're saying that line 1 and 4 should be different amounts on the OID. Now, how does that relate to the 1099A?
1099A would be the same amounts in both box 2 and 4, and they would match box 1 on the 1099 OID.
Okay, so if box 1 is 100,000, then on 1099A, box 1 and 4 are going to be 109. I mean, box 2 and 4 are going to be $100,000.
Exactly.
Thank you.
Mm-hmm.
And then once you print these out, then you've got to mail them, so they're not being sent electronically. Is that what you're saying? If you're doing them electronically on Fire?
If you're doing them electronically on Fire, what's the question?
Then you have to print them and mail them, or they go to the IRS electronically?
Oh, you're talking about copy B, the copy that you send to the bank? Or copy, yeah, we're talking about 1099As, right?
Yes.
Okay. You're talking about copy B, the copy you would actually send to the bank?
Oh, I see. So that's the one we print and send to the bank. Got it.
Yeah, you don't print copy A. I mean, that would be pointless in using the software for sure. So yeah, you can print copy B and you can print copy C. And in fact, even in the software, it has right next to the checkbox for copy A, it's all, this is for information only. Don't send this in. I mean,
got it.
I'm paraphrasing, but it's basically what it says.
Okay, now also, I think at one of the first classes you said leave all the others blank. So do we leave, 5 and 6 blank, description of property and who's liable?
No. You don't leave that blank. 5, you would mark yes on an abandonment, no on an acquisition, and box 6, you would describe the property. So let's take the example. Okay, what are we doing with 1099A? We're identifying the interest. Okay, so your interest is in what? Some asset? So would we not describe the asset in box 6? Here's a phrase I like to use. Instruments, and the S I put in parentheses, so it could be one instrument, or it could be several instruments, deposited in account number whatever. Same account number that's down in the account number box. You're describing the property. It's been abandoned. And remember, it's really just like, foreclosure. Who's gotten a 1099A after the foreclosure of their property? No one?
I don't know. I can't hear you. I can't even hear the question. So.
Okay. Basically, on a 1099A, let's say I got foreclosed on, and the bank sends me a 1040 or a 1099A. They're going to have in box number 2 they're going to have the principal balance. So we'll say that's $165,000. Okay? That's going to be in box 2. Then in box 4 is going to be what they call the fair market value. Now, if the house at the point of sale was only worth $145K, they're going to put $145K in there. Okay? Is it the same amounts? Oh, okay. And then box 5, the bank is going to mark that yes. Okay? And that's because basically that box says something to the effect of, is the borrower liable for paying this debt back personally or something like that. So they would mark that yes. And then in box 6, they're going to describe the property, which will actually be your address, 123 Main Street. Okay? Now, remember, they're identifying the interest, right? So, box 6, you have interest in that property. And the bank has an interest in this property. So they're claiming an abandonment of your interest in this property. They don't list here the interest, right? Just like we don't list the interest here when we're filling it out. We list the asset that we have the interest in. So here's the asset, 123 Main Street. Or in our case, the instruments deposited to account number, whatever. They're the assets. Okay, the assets are what go here in box 6. Does that answer your questions?
I think so. And then you say abandonment as well?
I'm sorry?
Did you say the word abandonment?
Yeah, abandonment. When you marked box 5 yes, that made it an abandonment.
Okay.
If you were to mark box 5 no, that would be an acquisition.
Right.
Okay? Alrighty, let's take, okay, hold on.
Can we do anything better about hearing you? It's terrible tonight.
Is it? It's
been better other nights.
I know it's a two-way thing because whenever you talk, it's just massive amounts of static coming over our line. So, unfortunately, it's the program. That's why I didn't want to use this program originally. We had a different way of handling it before, but now because we've got so many callers, we have to use this particular software. And here I go on my debtor rant. It's crap. So I'm sorry.
Well, it was better last week.
It was much better last week?
Oh, definitely.
Is it volume? Are you not able to hear, or is it the quality?
Quality.
Yeah, that's the same here. Like your quality coming through on ours. It may just be the connection this time. What I'll do is I'll disconnect from the phone call and I'll reconnect before we get started again. And maybe we'll have a better connection. All right. So let's do. I know because everybody wants to mingle and use the bathroom and everything. Let's do a 15-minute break. But really, everybody look at your watches. Let's be in our seats, quiet and ready to go. To be courteous to the people on the phone, so that they know that they've actually got 15 minutes and not a half hour. Okay. All right. All righty. Any other questions about what we've been discussing? Go ahead.
We've been discussing the federal tax of the 1040, and in terms of the state, how you suggested that we do the state filings, find out how to do the state filings. Is it because the state doesn't recognize this, or the
I'm just those particular forms aren't state forms. Now, realistically, in the state of California, I believe the form's called a 540. If you're going to take your numbers as you reported them on your 1040 and report them on your 540, it should be the same effect because there's still the withholding, there's still all those things. In fact, who knows? Maybe you'll get a check back from them too. I don't know how the state tax system works. Yeah.
IOU now.
Well,
that's right,
actually, you know what? I wanted to talk about that because I thought that was very interesting, this whole California IOU thing. Okay, here's my take on the IOUs, and I'm basing this on something I'd heard the other day about how the state had to approach the banks and work out a deal with them on these IOUs. Okay? IOU. How many of you have heard of bonded promissory notes and money orders? And we've talked about those things, right? Those are asset or private money, right? Okay. A California IOU is private money. When you deposit it, guess what? You got money in your account. Now, what did they have to do? They had to make sure that the banks were going to accept this private money. But guess where the money comes from? You. As soon as you endorse that IOU, you paid yourself. Okay? As soon as you spend it.
I got another one, actually. Say your property foreclosed and there's some back property taxes on there.
Uh-huh.
How would you report that? Is it a 1099A with an acquisition or abandonment?
On property tax, okay, property tax is kind of like the student loan example we went through. When you receive your property tax bill, there's already an asset here, okay? And there's interest in that asset, okay? Now, they can't touch the interest in the asset unless you did an acquisition, because then you're saying acquisition, exchange. Exchange those two numbers, okay? Or pay it. those are your options.
Or you can abandon it.
I wouldn't abandon it because there's you're not looking for a return of these funds. You need the county or state needs to get those funds because that's what's paying for your benefits and privileges that they're providing. Okay. So yeah, the services and whatnot that are related to your property.
So it would be the actual amount that
is that
shows.
On? Yeah.
Yeah, it's on. Okay. So the actual amount that you see, the last amount, that's what you would acquisition.
Yeah. The current balance or whatever. The asset is okay. Same with like here. Let's do a short example of like utility bills. And anyone know why CFOs get paid so much money? Because they understand how to use 1099s. Okay. In the example of either a utility bill or a tax bill, like property tax bill or anything like that, even a state tax bill, anything that gets sent to you that has a payment coupon at the bottom, okay, anything that has that payment coupon, there's a reason that payment coupon is on there. It's because they've got an asset sitting here. Now, if you take the coupon, let's say this is our coupon here. And typically on the coupon there's going to be the account number. So we'll say this is the account number up here on the upper right-hand corner. And then below that it's going to be the amount of the bill. So we'll say it's $10,000. And then they're going to have a little box right here for you to fill in the amount that you're sending in, right? Then over here they're going to have the name of the entity that the payment is going to. So let's say it's Internal Revenue. And let's see what else is usually on a payment coupon. Detach here. Oh, yeah, your name will probably be somewhere on there, right? So here's Brandon, all caps on here. And then down here at the bottom of the payment coupon, you'll see an interesting little row of numbers. There you go. And it's going to be basically your account number and the equivalent of probably some kind of routing information. So we'll have a couple more numbers in there. And this amount. Yeah. Somebody just said it's the same as a check. It is a check. Okay, this little encoded row of numbers, this is a money order. really what they're asking you to do is write money order up here. Put the amount in right here, 10,000. That's the amount I'm authorizing. And I'm going to put my signature right here. Ta-da! It's a money order. So what I'm doing by signing this and writing in this amount, I'm authorizing them to use the interest in the asset. Okay? See, what happened was they got authorization on your credit, and that's the asset sitting here. But the authorization came on your credit. So the interest is yours. You have interest in that asset. They can't touch it until you authorize them to. So this is the same as doing a 1099-A, is doing an acquisition on this. When you make this payment coupon into a money order, you've now basically given them the authority to do an acquisition between these two numbers. Microphone. Check.
You have a car note and it's $10,000 is what you owe. You get a payment coupon for $300.
Right.
And you write $10,000 in there.
Right.
They should reduce both sides of the ledger, but they don't.
Right.
You know what I mean? You could put $10,000 in there, and it should be.
Well, realistically, because they only got authorization for the 300.
Oh, I see.
With this particular payment coupon.
I see. Got it.
Okay. Now the original note, which would be on a different ledger, that created the full amount of the asset, and there's a full amount of the interest sitting there. So if you did an acquisition on that, it would balance out the account.
Got it. Okay. Thanks.
But when they send you a coupon, they put on there. It's when the amount that they have on there on the payment coupon, it's the same as having up to. Pretend the words up to are in front of that. So you could put any amount up to 10,000 in this line right here. Exactly. It's basically an acceptance for value. Acceptance for value is a concept. I accept. I return for value. I accepted it for value, 10,000, and I returned it for value, 10,000. That's accept and return. And it's got my signature on it. So that's how you turn a payment coupon into a money order.
Hey, Brandon. You warned about doing that with the utilities and stuff like that because they might stop your services. Is that because they don't understand what you're doing or what?
Typically, they don't know what you're doing. They're used to getting checks and money orders and things like that. So you send back the payment coupon all written on, and they're like, what's going on here? See, the cool thing, you do this with IRS, they just pass it on the line. It goes over to CID, and CID, they know how to handle this. They go, oh, look, the guy knows how to make a money order. Perfect. Balance out that account. Actually, since he's going to be acting like creditor, why don't you send him another bill? See if he'll help us balance our books. Okay? And I'm not even joking. There are people who have had that happen, where they keep doing accepted for value, they keep turning it into a money order, so the IRS sends them another one, sends them another one, sends them another one. Then after about 5 or 6 of them, all of a sudden they don't get any more. Yeah, they're always a different amount. Yeah, because they're balancing their books. They're like, hey, that guy gets it. Let's start sending him some bills and get our books balanced. Yeah, because the IRS they're looking to it as, hey, we've got someone who's going to help us balance our books. So they'll send it to you 5 or 6 times, and then they get it. You're a creditor. No matter how many times they send it to you, it's going to come back like this, and you're not in dishonor. Right? You've returned it within 72 hours. Yeah. I want to help them out. I'm a creditor. Microphone. There's one.
Okay, so I get this. Turn it into a money order, send it back. Is there anything you need to do before you do that?
What do you mean?
Is there any prerequisite to just turning that into a money order? Do you need to accept your birth certificate for value, or can you?
Yes, it's a good idea to, because whenever you're using the asset side of the account, you should be in control of the trust. Okay. So the whole birth certificate accepted for value with a bond put into the Secretary of Treasury, that's reversing the trust. So now I control the trust. Okay, if I control the trust, then I can use the asset side. Now, those who are familiar with HJR 192 and the various codes and public laws that were enacted from that, remember, we can't just give debtors the ability to just create money at whim, okay? Because we'd all have $35 billion in a bag of fries, it'd be $2 billion, okay? So what they did was they took away your ability to hold legal title. And in exchange, they gave you something of greater or equal value. And that greater or equal value is, since you can't have title, and since you can no longer buy things, you can only exchange interest, you're given the benefit and privilege of having your debts discharged by the government. Okay? So that was the benefit and privilege you got for that. Now, that's why this works. Now, if I were to just write a money order for $20,000 and take it down to the local car dealer and go, yeah, I want to buy that car right there. Was that something that they guaranteed in HJR 192? Did they say, we're going to discharge all your debts and we're going to buy you all the shit you want? Whatever you want, we're just going to buy it for you. No, they didn't say that. That's not what the code says. So those who are trying to use private instruments in the public to buy things, those are the people who end up in jail. Okay? Yeah, you don't have the right to do that. You can't just at whim create money. If we let you do that and we let all the debtors do that, we'd be in a lot of trouble. But if you got a debt, we'll discharge it. That's a benefit and privilege you get. Or that's a benefit and privilege your public entity has. Okay? It's interesting because a lot of the new people in the class, a lot of them come from, and including myself, come from the sovereignty movement. Okay? These are people who want to fight for their sovereignty. Okay? Funny thing is, we always talk about jurisdiction A and jurisdiction B, right? Okay. Did you know that in jurisdiction A, and jurisdiction A isn't something specific to our republic. Jurisdiction A is the equivalent of private international commercial law. Okay? Everyone is a member of jurisdiction A. That is your original commercial jurisdiction. When we talk about jurisdiction X, that's the non-commercial zone. So no commerce really happens in jurisdiction X. So jurisdiction A is the basis of all commerce. Everyone in every nation is sovereign. Did you know that? No. Read the, the Universal Declaration of Human Rights put out by the United Nations. Everyone's sovereign. Okay, hold on, we're going to change the tape. I was like writing my A and B on the board. A, B. Away we go. Okay. Universal Declaration of Human Rights. Everyone is sovereign. Everyone is sovereign in jurisdiction A. That's where everyone is sovereign. Okay? And because everyone is sovereign and everyone has the unlimited right to contract, you've all ended up over here in jurisdiction B. Now, did you have to sign a contract to actually get into jurisdiction B? No. Does anyone know what a contract is? It's just the memorialization of an agreement. A written contract is just the memorialization of an agreement. Your performance determines whether or not you've contracted. Okay? For instance, hold that. We just had a contract. We didn't have to write it down, but by his performance, he agreed to hold that pen for me. Right? Did he not agree? Yeah. He has control of it. But look, now I got it back. So now there's been an exchange, a different contract, a different trust. See, in this trust, I'm the grantor, he's the grantee. In this trust, he's the grantor, I'm the grantee. Okay? Now, that's actually a good concept to get into, I guess, grantor, grantee, and how everything's a trust. In the world, go ahead. That's a question.
I just had a quick question in regards to someone who's here from another country. What do you suggest that they do to be able to, can they do what we're doing if they are from another country, born in another country, and have a Social Security number?
Yeah. They're operating in Jurisdiction B and Jurisdiction A. They've got a trust. If they've got a Social Security number, that means they filled out an SS5, and they've got a contract with Jurisdiction B.
So how do they do that without the birth certificate? How do I create a bond?
Now, you could use a certificate of naturalization. You could use your birth certificate. It doesn't have to be from this country.
Oh, okay.
Like, I know some of my friends born in the UK, they have their birth certificates on deposit at the U.S. Treasury. I'm still trying to figure out a way of depositing my birth certificate over at the Chancery of the Exchequer in the UK. It's the equivalent of the Treasury.
What if
I want to set up my asset account over there too.
If they don't have a birth certificate?
If they don't have a birth certificate, some type of document that symbolizes a trust. Yes, certificate of live birth is, you know. You can do what Obama did, make up a new one. I wouldn't suggest that. Yeah, unless you're president, then you probably got nothing to worry about. Microphone.
All right, so certificate of naturalization. Now, those are issued with, they almost look like a passport because they have like the picture. And from what I was reading on the internet, they only issue just one original. So what's the next process? Do you take that and go to some office and get a copy certified, or do you get another one?
Just use the one you got and get another one. I think you have to pay a substantial fee. What is it, $150? Like $300.
No problem, but
it's not like going down to the county recorder and getting your birth certificate for $12.
Yeah,
it is a pricier process.
Right. Okay. So you do apply for another one, but you can use that one. Okay, great.
But you cannot use a copy.
Right.
You cannot use photocopies of anything. If you're reversing a trust, you can't do it with the copy of the document from the trust. The purpose of getting certified copies is that the certified copy has the force and effect of the original. Okay? That's why in a court, if I were to bring evidence into a court, if I just brought a photocopied document into the court, it's not evidence. But if it was a certified copy of a document, I could enter that into evidence and it would qualify because it has the same force and effect as the original.
More questions, guys. Sorry about that. But now, does this have to be like a very recent, within the last year, original, like the Social Security cards? If you're getting one from like 30 years ago, they don't look the same as today's. So will one from like 89 be sufficient as far as a certificate of naturalization?
It doesn't matter what it looks like, as long as it's an original or a certified copy.
Okay.
Then you're good.
Okay, because some Social Security cards have blue numbers instead of red numbers, and some of them.
Yeah, actually, I've only ever gotten one Social Security card, and I got it when I was like 7 years old.
Right.
And it had no numbers on it. Yeah.
And that's the same one you still use?
I lost it about 20 years ago.
Okay. So did you get more?
I've never been an employee. So, I mean, the last time I was an employee, I worked as a bartender at some restaurant, and that was years and years and years ago. And realistically, I never needed it. I think the only time I ever needed my Social Security card was maybe my first job because I was under 16. I was 15. And I had to go get my work permit. And when I went to get my job, I had to show my Social Security card and all that. I think the last time I used it was when I got my job at Carl's Jr. I think is the last time I used a Social Security card. I've never been asked for it once for anything.
Do you know how to make a Long Island iced tea?
I do. I
Okay.
know how to drink them too, without getting hurt.
On the bond process, we were looking at doing the notary certified copy and having a notary send that packet into the Secretary of Treasury, right?
You're having the notary certify a copy of what?
Birth certificate, bond, and cover letter.
Yeah, it's.
Certificate of like third-party witness.
Okay.
Does that make a difference?
Not sending a certified copy certified. Okay. Yeah.
Certifying that it's in the envelope. Is that a big deal? Because I'm looking at maybe doing that tomorrow.
Are you asking, is it necessary?
Yeah, is it necessary? Does it help? Does it give?
It's the private side, and not, at least to my knowledge, I've heard of a handful of people actually getting their bonds rejected, but I'm thinking they must have sent it in certified mail or something that made it go to the public side, or they didn't address it to the actual Secretary of the Treasury. If you address it to the Secretary of the Treasury and you send it registered, it's in. It's good as there. It won't get rebutted. It won't get sent back unless there's something wrong with it. Like if you haven't worded it right or something like that, it may get rejected. In my experience, not one of the people I've worked with have ever gotten any of their bonds rejected, including those who put in birth certificates from the UK, from Mexico, and other places. They go through, go in, accepted.
Okay.
If you don't get a response, it's accepted. Plain and simple. Especially in private where they can't respond.
Is a certificate of live birth the same as a birth certificate in this purpose?
I don't know. All we have in California that I have access to is called a certificate of live birth. I think it's an interesting name, though. It's a certificate of live birth. Remember, we're in Admiralty, right? And birth is a spot for your vessel. And it's live birth as opposed to a dead birth. Right? What would a dead birth be? Maybe for a corporation or an entity? So if it's a certificate of live birth, that to me says private vessel. And I doubt they put out too many certificates of dead birth, but the live vessel is the private jurisdiction, Jurisdiction A. That's where the private vessel, they have to create a vessel here first so that you exist in the world of commerce. If you don't have a legal identity over here in Jurisdiction A, you can't contract with Jurisdiction B. So they create something over here for you so that they can contract with you over here. Because everyone over here has unlimited right to contract, and all the people over here in this bankrupt nation have the right of having their debts discharged because nobody can hold title. The republic is bankrupt. The democracy is operating on top of the republic, and it's subrogated the rights of those in the republic. Microphone.
Another question. You open a bank account without a Social Security number?
You can. I wouldn't recommend it. You can. It's possible.
I don't know a bank that will these days.
Yeah, you have to. It's a process.
It's a process. You can do it.
Yeah, it's a process, and I know people who have done it, and it's possible.
Can you use this process without the Social Security number?
Which process?
No idea.
No. You have nothing to report on your what are you going to do? Leave it blank? They're going to go, well, who are you? What account are we supposed to credit or debit? Yeah.
Just a quick question about one of the people in our group has not yet gotten their birth certificate. Would you recommend that they hold off on the 1099 process until they have that in place?
It's not a necessity.
Okay.
I recommend everybody do it
Right.
so that if for nothing else, it's symbolic of your commitment to being
Absolutely.
responsible and in control of the trust.
Absolutely.
If all it's doing is getting to the Treasury and they're going, another one of these, and they trash it and throw it away, that's fine. As long as for you it is symbolized that I'm taking control, I'm taking responsibility for the trust, that's what's key. Because we've discussed like how to take legal title of your property. But you all know that I don't advocate or recommend that unless you're ready for what? To take responsibility for that property. Full responsibility. Not this limited liability crap, which is a benefit privilege of B. Okay? If you take legal title away from them, your property isn't protected by them anymore. So yeah, you could get your car and take legal title to your car. But now you're fully responsible for everything that car does and any damage that it does. And debtors like operating under limited liability.
Brandon, could you explain? I have friends that have done the acceptance for value on a birth certificate with a bond and without a bond. What is the difference between the two? Or what would the implications be?
They've done accepted for value like on a bill or something.
Accepted their birth certificate, sent it to the treasurer with no bond, and then I know other people that have sent it with bonds. Does it have to do something with the amount of
they're two separate. It's a combination of two things that are happening there. Okay, the bond or the accepted for value birth certificate, you're reversing the trust. Right. Just like if I were to take the certificate of title for my car, sign the back of it, and hand it over to DMV, guess what? I now have legal title to the car. Drops off their computer. That's all you had to do. That's how easy it is to get legal title to your car. Sign the back of your certificate of title, hand it over to the DMV. They're going to take it off the computer. Now you're not on their system anymore. I'm serious.
But then how do you get the MSO back?
You won't. You can ask them for it, but they're probably like, oh, MSO, what's that? I don't know what you're talking about. Manufacturer's Statement of Origin. If you want to have that legal title, remember, legal title comes in many forms, and interest comes in many forms. Like, for instance, if I have a UCC1 claim on a piece of property, I have, in effect, a legal title to that property. Now, I am not the only one with a legal title to that property because somebody signed a grant deed, and they filed the grant deed with the county, which gave the county a little bit of legal title. So the county's got legal title. I've got legal title. The grant deed, the person who accepted the grant deed has equitable title. Isn't it interesting that I think probably the only document that you deal with in purchasing a house that has two signatures on it is your grant deed. The person selling the property signs it, and the person acquiring the property signs it. It's a trust.
What happens in a reconveyance?
Reconveyance? They basically say, reconvey this deed to this party.
But they just do it automatically?
Who does it automatically?
Well,
If you pay off your house, it happens automatically. That's the trustee's job. You defined that in your deed of trust. You said, upon payment in full of whatever, the trustee will reconvey deed to borrower.
right. But it's still my grant deed is still under my name?
It's really a reconveyance of deed is the same thing as a UCC1 termination. If we look at the deed of trust as a lien, the reconveyance is a termination of that lien. That's it. It's just removing the bank's interest. That's all it's doing. You already have the deed. The deed's already in your name. They can't reconvey it to you. You got it. It's yours. The property's yours by virtue of the grant deed.
But they can't reconvey it away from me?
No.
Okay. That's if I have a reconveyance.
Yeah, no. All they can do is the bank can sell its interest in the property. That's all they can do. And then they could, I mean, really, you can play a lot of funny games with the public records. And that's what they're doing. They're playing games with the records. So they file something in the county. Oh my God! Did you know you could file stuff in the county? and you could turn it right back around on them. Yeah.
The bond. Yeah.
Oh yeah. Forgot all about it. Okay, so when you're just accepted for value, the birth certificate, you've just reversed the trust. Okay, just like the certificate of title on the car, right? When you're sending it in with a bond, you're saying if there are any outstanding debts, liens, obligations, or anything that would prevent me from taking control of this trust, use this bond and set off all those debts, obligations, and liens.
What size bond?
What do you mean, what size? Like how big? Unlimited. Yeah, you can make it unlimited. You can make it 500 billion. You can make it whatever you want. You know, unlimited's good because you don't know what kind of obligations they got out there for you. You know, because again, if you've ever looked at your IMF file, you know that you could have hundreds of billions of dollars in debt. You're like, where did this come from? Yeah, I don't remember dealing opium in Afghanistan. When did that happen? You know, but you're on there doing it, and right here you're trading arms. I'm trading arms, and I'm a drug dealer. How come I got none of the benefits of that? Yeah, somebody did.
I'm thinking of the conversation we had about records and keeping your records straight. So this is a private submitting the bonds in the private jurisdiction. So then, as I recall, you said you need to put a notice of public record for anything that you do in private. So it stays in the private, but it's notified in the public.
Right.
Is that correct?
Exactly.
So what do we do then? Do we need to do that with this bond submission?
Baylor Bailey. UCC. Well, not on it. The UCC is just a public notice of what's already happened in the private. I control the trust. So, who's the bailor? Strawman. Strawman has the right to hold property in public. People in A, jurisdiction A, they don't have the right to hold property in public. They can't have bank accounts. They're basically, you don't belong here in B. You know, they're outsiders. Okay? So what happens with the bailor-bailee situation is we're saying all this guy, jurisdiction B entity, all the public entity stuff and property, recorded and unrecorded, is being put into a trust. The trustee, or the bailee, is this private entity. Okay? So this private entity now controls this entity's property. And over here in A, he's got more rights. He's not limited by what jurisdiction B is limited by. Okay? And that's really, you've reversed the trust. That's the same thing you did by accepting for value the birth certificate. You're saying all this guy's property is being controlled by this guy.
Another question I had was that if you actually give the title of your car to the state then is no longer responsible.
No, it's on. It's on.
The state's no longer. Thank you. The state is not responsible for the car anymore. Therefore, you are.
Yeah.
But however, does that also give you the ability not to use license plates and registration as well at the same time?
Yeah. But does it mean you're not going to get pulled over? No. And depending on whoever pulls you over and their particular
agenda,
their mood. Is he really not in the mood to hear any of your patriot bullshit? He'll take you to jail. He'll be like, yeah, I heard it all before. Step out of the car, please, sir.
I actually know a guy that had that happen to him. He sued the officer, the city.
No, yeah, I'm not saying you could, realistically, he could put a lien on the bond of that officer and he'll never work again.
Yeah, he won.
Yeah, and Winston did something similar to that. Those of you who are familiar with Winston's work, he got harassed by, I believe it was a Utah state trooper or a sheriff or something like that. And you should have seen the lien he put together against that guy's bond. It was, big.
Well, the guy that I know actually found himself owning the city hall, the police department, the fire department, the parks, the judge. He
Yeah,
basically owns the city.
and that's not what we advocate here. It's possible.
Yeah.
It's possible. If you really know what's going on in commerce, and you know how to perfect a claim and perfect security interests and things like that, oh man, you could be a handful. You could really do some damage. Now, if you really understand, though, do you need to? No. And as a creditor, you don't want to destroy the system. You want it to survive. You want it to become more effective. Yeah, more efficient, more effective. You want it to work. And if we're constantly chipping away at it, we're taking away its ability to do its job. And if you keep getting rid of these public officials, pretty soon there ain't going to be nobody who wants to be a public official. And pretty soon they'll just stop pulling people over altogether. And you may think that's a good thing, and you may think that's what you want. But I got kids. I don't like it when some jackass is going down the street at 65 miles an hour inside my neighborhood. In fact, if I had a siren on top of my car, I'd pull him over. Okay? I might even beat him with my nightstick.
In regards to bonds, could you create a bond for instead of like an insurance policy? Could you, or is that kind of gray area?
Should I even mention this?
Yes, that'd be yes.
I'll give you an example. Someone I know has actually done that exact procedure. A friend of my friend needed to be insured for his business product. He was going to be selling his business product in a Las Vegas casino. And the Las Vegas casino wanted some kind of surety on his product so that if anything went wrong, they want to make sure it's going to get paid. So, my friend just put together a bond and everything, deposited it with the Treasury, and then made up a certificate of indemnity/liability. Basically looks like an insurance certificate saying this party is covered for up to this amount. The holder of this certificate is the Flamingo Palms or whatever. You know what I mean? It looked just like an insurance certificate. We sent it over to him. He said, thanks. Yeah, like, perfect. This is exactly what we needed. And in reality, it is. Because now what happens when they present me with the claim? Because my friend is the surety. If he's the surety, smooth, huh? So if he's the surety, then when he gets presented with the claim, what is he to do? See, so if you're going to be doing this, know what you're going to do when the claim comes in. And the Flamingo sends me, oh yeah, we just got a $100,000 claim against your product.
So you couldn't discharge it against the bond?
I could. It's a debt, right? And if I'm set up to operate on the private side, I'll have no problem with that, with discharging that. But don't just go making up insurance policies. Okay? It's really do it legit. You know what I mean? Like I sent the bond off, or he sent the bond off to Treasury first. He had the bond in place, and then he made up the certificate of the bond, and then he used the certificate as that's what they're used to seeing. Remember, it's all business, it's all commerce. What are they used to seeing? And we know they're used to getting a form that's some kind of a certificate of indemnity. Yeah. So that's what I gave them. In fact, I took the format exactly from a certificate of insurance or bond that I had seen somewhere else. I just said, oh, that's a good format. Works good. And I had the bond number in there, the registration number of the bond, because it was registered. Has to be registered. If you're going to put it out there in the public, if you don't register it, it's illegal. Okay? You guys know why we're allowed to trade these bills of exchange? Why we can use these in public? Because of these numbers on them. This is the registration number. It's a bill of exchange. But because it's registered, we can use them in public. And because you're using them, They assume you know that you're operating in admiralty and that it's commerce because you're using bills of exchange. You must be a law merchant. If you're passing around bills of exchange doing business in the world of admiralty and commerce, you must know what's going on. That's why they don't have to tell you anything. You know. Otherwise, you wouldn't be using them. Okay? They figure, hey, if this guy's going to actually be using negotiable instruments, well, then he must understand negotiable instrument law. He must understand security interests. It's a presumption. I'm not saying it's good to make presumptions. I'm just saying they're being made by your actions, by your conduct. Remember the story in the Bible of Solomon and the two women. And they were fighting over the child. Yeah. They're fighting over the child, and Solomon goes, okay, let's just cut it in half. What was he doing? He was trying to figure out who's the debtor, who's the creditor. Because the creditor is willing to risk it all. And the woman who goes, no, don't cut it in half. Please, let her have it, but please don't cut it in half. Guess who got the kid? The one who was willing to lose the kid. She was the creditor. Creditors always win. Debtors always lose. Okay, and you guys heard the story about Kevin's interaction with the IRS and how 3 weeks ago they would have expected a completely different interaction. But instead, it all went down how they wanted it to because they came in as the creditors. Hey, we're here to help you guys. We're here to assist you. And because that's the attitude they came in with, they walked away with exactly what they wanted. Creditors always win.
Way back at the start, you started talking about the blocked credit system.
Mm-hmm.
Now, was that what you diagrammed out where you had the checking account and the credit cards, or is that something different we didn't get into?
The block credit is basically, remember, you create all the money, and to keep you from getting out of control and just creating ridiculous amounts of money, they have that block credit system in place. And the block credit system says, we're going to borrow your money, but we're going to pretend like we loaned you some money, and you're going to pay it back. And based on that, that's going to gauge whether you're interacting in commerce, right? If you're paying back, aren't you probably working somewhere? Okay, that's all they want to make sure. They just want to make sure everyone's busy. If we just, oh yeah, I could use 10 grand and I'm signing, okay, here, now I've got 10 grand. If that's the way things went, everyone would stop working, the whole system would fall apart and collapse. Okay, so they can't just let a bunch of debtors just create money on their whim, so they created the block credit system, where you don't have direct access to it, but guess what? You're the one making it all. But you got to go through an intermediary. That intermediary is a bank. All of them, even the courts are banks. Trustee, bankruptcy, bank, banker. Oh, go ahead. Did you have another one?
Well, I was just going to ask you, there's all talk about the Amero coming in and the financial system collapsing and such. What do you see on the horizon, with what we're learning to do? You have any projections on, what will transpire down the road a few years or later this year or whatever? I imagine the banks want to keep things rolling the way they're going.
Yeah, no, whatever happens is going to be in your best interest. So if we go to the Amero, who cares? Basically, it'll cost me less Ameros per gallon of gas. If the Amero's worth more than the dollar and I'm going to have less of them, well, guess what? They're probably going to buy more. Right? Isn't that usually the way money works? It's based on the supply and demand. So, yeah, maybe it'll be 20 American dollars to every one Amero. Well, that's great. Now when I go to a restaurant and buy dinner, it's only going to be 5 Ameros, rather than $100. Yeah, it's a give and a take. And as a creditor, we don't care. We don't give a shit what they do in jurisdiction B. They can do whatever they want. We're going to be working from over here to make it better no matter what they do over here. So if they're doing for all I care, California IOUs can become the new medium of exchange, and we're all be exchanging California IOUs. It doesn't matter, because as a creditor, We're always coming to bring the solution. We're always coming from a place of unlimited commercial energy. If we're coming from a place of unlimited commercial energy, it doesn't matter what's going on over here. They could be doing Ameros, they could be doing dollars. I don't care if we go to pesos. It doesn't matter. We go to euros, pounds, who cares? They're all fiat currencies. Really. Actually, the only thing I'm afraid of is going back to the gold standard, because that's limited in supply. And people will hoard that. You have something that's limited in supply and you use that as your medium of exchange, you're going to have problems. You will. In fact, if we wouldn't have gone to a fiat currency, I guarantee you we would not have the world we have right now. Because this unlimited ability to finance things, to just create money out of nothing, wouldn't have created all the great industries we have, the effective distribution systems we have. None of those things would exist if everyone had to put up some gold for it. But if all I got to put up is a signature, sure, I'll put up my signature. Build me a railroad. Build me a boat. Build me a harbor. Yeah. Under the gold, yeah, or silver standard or anything, yeah. Because what they're going to do is, guess what? They're going to start hoarding. Yeah, and it's a dangerous one. Yeah, you don't want to get into the, trust me, we don't want to go back to that system. Any system where the medium exchange can be controlled in its supply, like I can hoard it, you would see a complete collapse of the system. Because, for one, let's say you actually did get some gold. Are you going to go put it in the bank? Hell no. You're going to dig a deep old hole in your yard and you're going to keep it there. Because you don't trust the banks with your gold. Look what happened in 33. Everyone lost their gold. I ain't going to trust my gold with them. I ain't going to trust my silver with them. Sure, I'll put worthless pieces of paper in there. And they can, give me a ledger on the account. But I think one of the silliest things is people who take their cash and put it into a safe and bury their cash. You're burying a bunch of bills of exchange that could become worthless. Yeah, stamps. Very good. Who told you that? You're burying a bunch of worthless bills of exchange that can be changed at any minute. What happened? There's a reason why they change the currency from time to time. It's very easy to find those who are hoarding cash. When some guy walks into a bank with a bunch of $100 bills that have been out of circulation for 10 years, that's telling you something. Microphones. Go ahead.
This question has been going on in my head since I started listening to the calls, etc. Critical mass. You can't have society of all creditors.
You could, and it would be a non-commercial zone. If everyone was a creditor, willing to risk it all and give all of their commercial energy for whatever was asked of them, you would be in the non-commercial zone. That's, in the Bible, we call it Eden, right? That's before there was money, before there was debt, before there was sin. Sin is debt. Before there was debt, we were in the non-commercial zone. Non-commercial zone, everyone's a creditor. Okay? Because everyone, if you approach me and you're like, I'm hungry, well, I'm like, I'm going to get you some food. That's what a creditor does. In the commercial zone, somebody comes up and says, I'm hungry. You go, okay, how much you got? Give me. I want something for it. So as soon as there was a debt, we went into commerce.
So you're suggesting that folks at the Treasury would love to have 360 million bonds on hand, and
you're confusing having bonds as being a creditor. Just because you have a bond in your birth certificate in there doesn't make you a creditor.
Well, I understand the conversation of being, and then in the practical sense.
Yeah, okay, let's say tomorrow everyone deposited their birth certificate at the Treasury. What would change? What would change? What would be different? Because they'd all still be acting like debtors.
Except you'd have a huge influx of currency show up within 24 months, all of a sudden circulating 100,000
It's all private
tons.
money. You can't cash out.
But
Remember, they didn't guarantee you, whatever you send us, we're going to send you back in Federal Reserve notes. Yeah, send me a $10 million bond and we'll wire $10 million to your account. That ain't going to happen.
So maybe I'm misunderstanding. if we're creating funds with our signature, and you got 360 million people tomorrow,
blocked credit. Blocked credit.
not after an OID and A
So yeah,
process.
you have the unlimited ability to create money, but guess what? In public, you're limited. You're blocked from that credit because people would just start creating money.
Right until we're fractionizing all our things using credit cards, though. Now we're multiplying the money supply 10, 100, and inflation goes to the roof.
No.
Help me get that.
If you don't claim it back, yes. Okay? Because you're creating, instead of creating 100,000 in debt, you're creating 500,000 in debt.
Right.
But when you claim those funds back, the IRS, whatever the IRS takes out, which is going to be a huge chunk, that goes against the public debt. That's taken out of circulation. That's the whole purpose of the IRS. Isn't it interesting that in the same day we got the Federal Reserve and the IRS? Like, hey, we're going to create this company that's going to make a bunch of funny money. And hey, we got to create a company that's going to grab it all out of circulation. That's why they were created at the same time. It's designed to get you to actually use their funny money.
But there's a mathematical problem in that because the IRS, like we're talking about how the IRS really only takes a third of your taxes. That's what we've been talking about. So you got 2/3 still pumping inflation up.
No, but you're claiming it back. Okay? You're not changing the money supply. You're changing the rate at which it circulates. That's all you've done. You haven't changed the supply of money. In fact, if you claimed it all back, you've got less than what was circulating before because the IRS did take their cut. So the public debt did go down. And it's because you claimed it back. See, what gets claimed back, that doesn't increase the public debt. You claimed it back. It's when you don't claim it back that it becomes public debt. Okay? So if I wrote $100,000 in checks off of my checking account and the $100,000 goes out, if I don't claim that $100,000 back, that $100,000 becomes public debt. So if you look at the current public debt, I would estimate that from 1913 until now, there's approximately $11 trillion that we have not claimed back.
So if I get what you're saying, if in fact everyone was a creditor, the debt, the public debt, would dwindle quickly.
Yeah, to zero.
It's in fact the debtors that are creating public debt by unclaimed.
Yep. Exactly.
Got it.
So you're actually helping the system. You learn to use this system properly, you're going to be helping it. I guarantee it. But if you don't use it properly, you're just going to keep on doing what we've been doing. And my experience of this society is I don't think we're in danger of everyone becoming a creditor anytime soon. Okay. So, but given that, if only 1 in 10, realistically, if 1 in 1,000 of every person in our society was a creditor, you would see a dramatic shift worldwide in the way things are run, in the way things are going on. Just that 1 out of 1,000, that 1/10 of 1% could shift the world. You were talking about critical mass. That's a critical mass. Because what's 300 million divided by 1,000? 300,000? 300,000? So there would be 300,000 creditors in America, maybe 3 million. My math isn't that great. 3 million. So 3 million creditors in the United States. Could you imagine what 3 million creditors could do? If they were, in a good way, if they were really fractionalizing their money, taking all this extra money that's coming back, buying out public debt, going around and buying up all these houses that have been foreclosed on, and they're being sold for $1,000, $50,000, ridiculous prices. Buy it. Go to the public records, see who got kicked out of that house, and give it back to them. With the condition that they learn to become a creditor and do it for someone else. You can't just give a person a fish. If you just keep giving people fish, it's not going to solve the problem. You got to include them. You got to make them want to be creditors. Like, hey, wouldn't it be great if you knew how to do this? If you knew how to go around and get people's houses back for them and put them in them, wouldn't that be great? Well, I'll tell you what, you can have this house for free, condition upon you perform these tasks. You learn this subject, you apply this subject, and pass it on to someone else. You do those things, you get to keep it. But until then, I'm going to hold a lien on it. And if you don't do these things inside of a year, I'm going to foreclose on you, and you're going to be going through this. What do you call that? A deja vu. You're going to be having a deja vu.
Is this a pitch for your next class, Brendan?
Yes, my pitch is everybody learn to be a creditor, because if you learn to be a creditor, you can improve the state of your community and create more creditors. If we were all doing that and we were all learning how to fractionalize and get this money back, we could literally overnight change the state of our society. Because again, a lot of these concepts, like I know the idea of, well, what if everyone was a creditor? Truly, if everyone was a creditor, that'd be awesome. It'd be the non-commercial zone, and we'd all just be givers. We'd all be taking care of each other no matter what, right? But that's not the condition we're in. And because of selfishness, pride, greed, those elements, because they do exist, and I'm not saying you can get rid of them, I'm not saying you want to get rid of them. Because in reality, it's about having a balance. If you don't have greedy people, you don't appreciate those who aren't greedy. If you don't have suffering in life, you don't appreciate not suffering. There's always got to be a balance. Now, if we could actually balance the creditors with the debtors, that would be amazing. That would be an amazing world to live in, because it'd be balanced. And no matter how belligerent the debtors get, there'd be an equal number of creditors right there to offset their belligerence, ready to bring resolution where they're refusing. Right? So something to consider. The reason I've chosen to give these classes and to give this information away is so that this happens. This is my mission, to create creditors that are going to create more creditors, and we're going to change our society. Remember, we asked the question a couple weeks ago, how many of you feel safe if everything were to drop off the grid? No more police, no more government. How many of you would feel safe? And not very many of you felt safe. And really, that feeling, that insecurity, is internal. It's a reflection of what you're putting out on the world. You're making up that they're greedy. You're making up that they're irresponsible. You're making up that they're debtors, only because you're greedy, you're irresponsible, and you're a debtor. That's why you see it in the world. Ever heard the phrase, you spot it, you got it? Yeah. Everything you see that's wrong with the world, I'm not saying you're like this awful person. I'm just saying we've all got it inside of us. We've all got those things. And it's those things that we see in society. You know, it's funny because my brother, we're really a lot alike probably in a lot of ways that I don't choose to recognize. But growing up with him in the same house, it would drive me crazy just listening to him eat. Like, I'm like, ugh, stop slurping, you know what I mean? And in reality, I'm thinking, I probably eat that way. And it's something I don't like about myself, that I vilify it in others. So yeah, the greedy part of me comes up every once in a while, and I hate that about myself. So what do I see that's wrong with the world? Greed. Or people who have no compassion. Have there been moments in my life when I've refused to have compassion for someone? Yeah. Yeah, I've ignored people. Like, I don't have time for you. I don't want to listen to you. And I'm too wrapped up in my issues to deal with your issues. You keep your issues, I'll deal with my issues. Okay? And those are the aspects of myself I don't like. So guess what? Guess what I see in the world? Yeah. Right. But again, I think the question came up tonight, something about war. I think it was at the beginning, it was with you, right? We look at the world and we say, war is a problem, right? If there was no war inside of me, there would be no war outside of me. Or it would completely not manifest in my reality. It wouldn't be something I could acknowledge because a war doesn't exist inside of me. The fact is, there's a war inside of me. So I see war in the world. Like you've heard me talk about patriots going to war with the United States. You heard me earlier going to war with a software program and its programmers. There's war inside of me. And until I can extinguish that war, there will always be war outside of me. Can I extinguish that war? Do I really want to? No. But I do want to control it. That's a creditor. You can control these things. And yeah, greed may come up for you, but you can keep it in check. And if you keep your greed in check, you're going to start to see the greed around you being kept in check. You keep your own war in check, you're going to start to see the war in the world being kept in check. You start giving love away, guess what? You're going to see love being given away all around you. Because that's what you're creating. The world around you will always be a reflection of who you are inside. Like, isn't it beautiful that we're all here together discussing this, and that there's some part of us that has created this? I didn't create this. No, none of the gurus created this. We create this in every moment. And you and I together make this possible. And this room is right now a perfect reflection of where we're heading. Taking responsibility. What a great thing. And look at the stories we've had. You know what I mean? Just little things here and there about how when I choose to take responsibility in my life, look at the great things that happen in it. That's really all we're talking about. And how all of a sudden we've got this whole new outtake on life. It's like, oh, well, shit's not as bad as I thought it was. And it's not. You made up it was bad before, so that's what you were seeing. Now you're like, oh, well, it's really not that bad. And guess what? It ain't, because you say so. You just made up that it was bad before. Now you're making up, oh, well, now that I understand it a little more, it's not so bad. And if I approach it this way, I can make it better. So you've now taken responsibility. See, when we're the victim of the world, and it's the world's fault, and everyone else outside of me's fault for what I got and the way things are, that if those darned Pleiadians didn't do what they did, we wouldn't have this problem, always focusing out that it's their fault, it's their fault, it's even when it's my fault. Because if I'm making it my fault, I'm making up that there's something wrong with what I did, there's something bad, there's something whatever. I'm not coming from the infinite potential of the now. I'm judging myself. I'm judging others. That's not really a creditor type position. If you come from infinite potential in every moment, and you're not holding someone's past against them, you're not holding their debts against them, you're not holding your debts against yourself, because it's the debts you hold against yourself that are the most destructive. Because it's those things you don't forgive yourself of that you're constantly reflecting back into the world. Those debts you refuse to forgive yourself for are what make up the conversation about the messed up world you're living in. Like, I talked to this lady on the phone a couple weeks ago. She had a very dark take on reality. Her world was very, people are evil and it's wrong. And I mean, just listening to her was like it was like listening to a scary story or something. But that was her reality. That's where her heart was. I'm like, wow, we live in the same world, but my world's completely different than yours. Like this dark reality you live in, I don't live there. And she was manifesting it. So all she could see was what was wrong with the world and all the people that were doing wrong and how everyone's corrupt and evil, and it was just this horrible place to be. And I felt that. I was like, gosh, it must suck to live in your world. Because her world was very dark. And if we choose that perspective, that I'm a victim and it's all messed up, but not because of me. It's all because of something else. And then you make up judgments, because it's because of the way this guy dresses. That's why the world is so messed up. And if I make that up and I make that the reality, I will be driven crazy by people who are button-up shirts and pens in their pockets and jeans. What are you doing? Right? I could really get passionate and upset about that. And there are people who do get upset and passionate about that kind of stuff. I mean, it's funny, and we laugh at it, but we do it. Like I said, stop slurping. Like, really? Really? Like, slurping? Is that really that big a deal? Is he really hurting me? No. But it drove me nuts, because I chose for that to make me nuts. That's the way I'm going to react to his slurping. It's asinine.
There's a yearly event where creditors in training get together. It's 50,000 people in the desert for 1 week. And there is no exchange of money. It's not barter, it's gifting. And everybody gets taken care of, but they ask you to follow certain rules and guidelines, which are bring everything you need, give willingly and freely, be responsible for yourself, But they want radical freedom there. It's like, hey, if you're not hurting somebody else, not doing something, then enjoy yourself, but be responsible. If you see something out of place, fix it, take care of it. If you need help, grab somebody else. It's
right. And it probably starts out fine. How many days does it go for?
1 week.
How's the end of the week looking?
Awesome.
Really? That's awesome.
It's
because it's a lot of times it's hard to keep focus. It's hard to keep a debtor's focus on being a creditor for that long.
There are those who,
Oh, it starts out. Right. Okay, so they're shedding the old way of being, and then they're able to step into actually being a creditor. And then they go back to the regular world. And it's funny that that reaction, because that is, oh, look at all these people not being that way. And so they're going to turn right back into being the way that they were. Because, well, if you're not sharing, I'm not sharing, right? And that's probably why it starts off the way that it starts off. Well, I'm not going to just share with everybody that you didn't share anything with me. You didn't give to me. What are you giving? What do you got to give? That's probably how it'll start out until you finally realize that it doesn't matter. Just give. Just give. Accept and give. Accept and give.
Go back out into the world and they are doing creditor things for like the rest of the 360 days.
Yeah.
And that's, again, but you see the gap.
They've got burners without borders, as they call them. And after Burning Man a few years back, Katrina happened. And burners went down there. And they're ready to set up anywhere. They bring all their own supplies. They entertain the kids. They do things they just do. They give, and ask nothing in return. So now that's, if you go to burningman.com, you can find out, all the.
So now you got an idea of what it would be like if everyone was a creditor. Exactly.
I've had the pleasure of having 2 birthdays out there.
Yeah, I'll say there's a little bit of a skewed view because they're not all sober. And it's a lot easier to throw caution to the wind when you're not sober. But I'm not saying that you can't do it sober, because that's what we're practicing in here. At least I'm thinking most of you are. For the most part, we're sober. So it's something that is, as we start to manifest it and perpetuate it with the people in our lives, you're going to start to see it happening, especially when you start sharing these stories of being a creditor with people in your life. You're like, hey, guess what? IRS, we got together and this is how it turned out because I was this way and I was that way. And people are like, really? That's how you approached it? You know, because almost automatically, like even my dad's not an IRS agent, he's a tax accountant, okay? And when we were kids, he got audited. And IRS shows up at our house, he made him sit outside on our driveway. And he brought our files out and everything, but he made them sit there to humiliate them in front of the whole neighborhood, sit them on the driveway. He's like, no, you're not coming in my house. You're going to sit right here on the driveway, and I'm going to bring you records. And that's what they did. So, but again, that's kind of like that, you know, the IRS. You're going to stick it to him, you know. And he's a guy, I mean, his job is working with the IRS. And he doesn't like them. I mean, it's funny how just a little shift in your attitude can completely change your relationship with someone.
There's some cultures, I don't know if they're indigenous or not, but the way their society is set up is that at the end of the year, the person in their group, tribe, who gives away the most amount of assets, pigs, whatever, is held in the highest esteem in the whole village. And then it starts all over again. You know, he or she goes from zero to starting to, you know, learn how to, you know, acquire assets and this and that, and to try and be the
biggest giver.
The biggest giver, exactly, at the end of the year.
Yeah, that's a neat concept, and it's funny because that's kind of what we're striving for, at least I am personally. And the reason I'm here spending my time with you guys is I'm hoping that you'll do the same. If only 5 of you get this and apply it, that's worth it to me. Because if 5 more people are doing what I'm doing and taking their resources to help others, then you're gonna create more of those people in your life. And instead of being victims to society and that everything's wrong and we need someone to fix it. And I mean, I think it's interesting. I think Obama must obviously be working to be a creditor because he told you straight up, you got to take responsibility. That's what he's telling everyone. Take responsibility. Even Kennedy, one of our best presidents. Ask not what your country can do for you, but what you can do for your country.
But at the same time, Obama told us that we take responsibility. He didn't turn around and spend $8 trillion.
It's just funny money. And who created it? Or maybe some Chinese people. I don't know where the credit came from, but there's a lot of them Chinese. So they've probably got more credit than anybody. They got at least 1 billion people, right? Something like that? Dude, can you imagine how much credit is floating around in China? 1.6 billion people. There's more people in their military than we have in our entire country. Keep that in mind when the collectors come a-collecting. But if we step up and be creditors, they'll become our best friends. Because right now we're in debt to them. We have a big debt to the Chinese. If we step up and be creditors and they get paid, we're going to be like best friends.
They issue bonds, and then when their leaders change hands, they don't honor their bonds.
And 10,000 people a day are losing their house because they're not honoring their contracts. Now, I'm not saying it's a good thing or a bad thing. It's just what is. The fact is they're not able to honor them. Right? There's a lot of people who are literally, there's 10,000 people a day losing their houses. Like, that's devastating. Do you know what losing your house does to a family? You know what just financial problems do to families? Yeah. Yeah. And then what does divorce do to the kids? You know, So this is a noble cause. It's a very noble cause. That if you're truly committed to making a better society and not learning this because of what's in it for you, but learning it because of the change you can affect in the world, then you're in it for the right reasons. Thank you very much.